enabler of economic growth, private sector development, gender equality, and poverty reduction. That's why supporting increased access to financial services is a key part of our foreign policy, trade and economic diplomacy, and aid investments. We have a strong policy agenda to advance financial inclusion through our membership and engagement in various international organisations and global partnerships. One example is our partnership to promote financial inclusion through the Consultative Group to Assist the Poor, CGAP. It's a global partnership of 37 organisations to advance access to financial services for the poor. It's housed at the World Bank and promotes sustainable, inclusive financial markets through research, technical advice, and innovation. And it's something that the Department of Foreign Affairs and Trade in Australia has provided over $11 million in funding since it was first established back in '96. We're also a proud member of the G20 Global Partnership for Financial Inclusion, which is an inclusive platform for all G20 countries, but also interested non-G20 countries, relevant stakeholders, to carry forward work on financial inclusion, including implementing the G20 Financial Inclusion Action Plan, which was endorsed at the G20 Seoul Summit. Through various implementation mechanisms of this grouping, we're providing support to raise awareness of the opportunities offered by digital finance, as well as the safeguards, really important, obviously, aimed at protecting users from the risks of fraud, scams, and digital exclusion. And we're also providing practical support to policymakers for facilitating and expanding financial services for micro, small, and medium enterprises. As with everything we do here at the Australian Embassy and through the Australian government generally, there is obviously a gender dimension to financial inclusion. We're strongly committed to continuing to help empower women and girls to promote gender equality. We've committed around $65 million for global and regional gender equality initiatives in the current financial year. And our aid policy is committed to initiatives that connect more women with financial products, services, and resources that they need to thrive. Since 2016, as the Australian government and the Women's World Banking Group have been in partnership to advance women's economic empowerment. Women's World Banking champions inclusive finance for low-income women worldwide, driving impact through a combination of policy advocacy, initiating scalable, market-driven digital financial solutions. We're providing around $6 million currently to scale up women's world banking activities in developing countries to increase financial inclusion as a key strategy in addressing the economic impacts of COVID-19, which, as we all know, have been devastating. Our support for women's world banking work in developing countries is contributing to developing financial products such as savings, more affordable microfinance and remittances, and helping low-income women build resilience for themselves and their family. And through our programs directly from the Embassy here, we're also striving to embed equality and inclusion in everything we do inside and outside the Embassy. We recently, for International Women's Day this year, worked with the Campaign for Female Education, CAMFIT. CAMFIT, as many of you might know, serves girls and young women in impoverished districts in rural sub-Saharan Africa, tackling the interlinked challenges of poverty and gender that limit education and opportunity for young women and girls. CAMFIT's young female entrepreneurs had the opportunity at our function to showcase their small enterprises, selling products ranging from peanut butter, edible insects, highly nutritious, dried fruits, and handcrafted products from recycled material. Local microfinance institutions loans for much of this work opened up new pathways for young women to start and grow their small businesses. So it was a clear, practical example for these young entrepreneurs that financial inclusion is the key to providing the tools for accumulating assets, generating income, and fully participating in the economy. We're really pleased today to be part of Civio Institute's launch of the survey report on the state of financial inclusion of micro, small, and medium enterprises in Zimbabwe, and the Financial Inclusion Index. We know from experience and from everything we've seen before that the Civio Institute's combination of cutting-edge research, objectivity, which is something that I've always admired in their work, policy and advocacy engagement will make a critical contribution to inclusive economic growth in Zimbabwe. We look forward to hearing more about it now. Thank you.
Thank you very much to the Ambassador, Bronte Moles, for that rich opening for us. Thank you very much. I'd like to just give a brief on the administrative logistics. If you go out to the back of this building, that's where the ablutions are. We will have a tea break soon after the presentations from the Civio team. So we can look forward to that. And then I'll have a co-facilitator later on to handle our panel in the later afternoon. But we do have a full program for the morning, which will look at not only the report and the index, but also we want to hear your thoughts about financial inclusion in Zimbabwe, the financial inclusion strategy that is being implemented, and also to see how we can also work together to move such important issues forward. I'd like to invite the Executive Director of Civio Institute to give us his presentation, Quest for an Inclusive Society. Tendai Morisa.
Good morning to friends, Ambassador Bronte, for your kindness to host us here. It was a like short notice to say, oh, we are struggling, we're looking for a venue, and our friends from the Australian Embassy sort of indulged us. And to friends from the development sector, you're welcome. Friends from the financial services sector, you're welcome. I do not have a PowerPoint because my colleagues who are coming after me are going to bamboozle you with PowerPoint. So I thought just to give you a bit of a break from PowerPoints. We are 4 years, or this is our 5th year in the making. So we're a very young institute. We are a baby, literally. And so in the process, we've amassed some work and also made some mistakes. But one thing that I am personally proud of is what we are launching today. And I'll explain why. Most of the things that we've done as Civio have been funded by development partners, either our colleagues from PACT through USAID, from Ford Foundation, etc. But this one, we funded it ourselves. We looked for our own resources and funded it. So I think it speaks of a certain level of maturity and growth, and also I think a bit of a commitment, seriousness to the work that we're doing. So I've been asked to speak about a quest for an inclusive society because this was the tagline when we established Civio Institute. That Civio Institute is a quest for an inclusive society. And I'm glad that Ambassador Bronte has already laid out the global consensus around the issue of financial inclusion and the gender dimensions, demographic dimensions, etc. And also taking alongside that is the SDGs framework that is saying leave no one behind. So I think there's that consensus around that there's need for us to be dealing with financial inclusion in a context of increasing inequality that has been exacerbated by the global pandemic of COVID-19. But there's no consensus or how to even sustain a program of financial inclusion. If there's a place where there's need for a meeting of the minds between ourselves in the development sector and the private sector and also government, it is around financial inclusion. But again, the challenge that we face is our silo-based approaches, that you rarely see an ecosystem developing around it. So at the end of the day, we're seeing sporadic products, at times, well framed, but without adequate support systems. So our work at Seville Institute, since we established, grapples with the concept of inclusion, social cohesion, solidarity, and all these, we frame them around, and you will not believe it, we frame them around democracy. Because for us, democracy is not just about elections. And I think there have been many assumptions around equating democracy to elections. But for us, we actually say that elections are a necessary but not sufficient condition for democracy. Then you may ask us, what then makes the sufficient condition for democracy? Is the other angles of society, the material needs of society, how people actually establish solidarity amongst themselves, how people establish frameworks of coexisting, how people actually sustain their livelihoods. That's what is at the heart of democracy from its beginning. But we've tried to frame this concept in a very narrow way, to look at it from an electoral process or a very narrow political process. Because the moment we talk about resources, we're talking politics, right? The moment we talk about how resources are being allocated in a space, in a society, it's already political. So the issue of financial inclusion is also within the gambit of an understanding the political dynamics in a society. So for us, as we deal with financial inclusion, I'll explain how it fits into our work. We note the following challenges, and these are not only unique to Zimbabwe, but they are across Africa. An ineffective state to deliver development. Many governments in Africa and even beyond Africa now are struggling to effectively deliver development on their own. Then also growing levels of inequality and poverty that we're seeing across, not only in Zimbabwe, but across the world, and exacerbated again by COVID-19. Then the limited agency of citizens, an increase in a framework of what you may call dependency. We've reduced our citizens to welfare subjects. We've reduced them to be seeking for aid either from the state, especially for those in the rural areas. They have now become beneficiaries year in, year out of subsidies, welfare programs, etc. But these are the challenges that we face when you're talking about democracy, because democracy requires active citizenship. So the moment that they are made to depend on a state or on a market or anyone who's giving them welfare, their autonomy to make decisions becomes curtailed and limited. So democracy to us is both a political and economic form of organization. So we understand and we subscribe to the idea that financial inclusion is a critical aspect of democratization. So we have engaged in a series of studies trying to understand what citizens do, because at the heart of our work is the concept of citizenship, because we think that's the condition for democracy. So we have understood that citizens construct their own livelihoods. Citizens are engaged in producing goods and trade those goods. So citizens do trade, citizens produce goods, public goods, financial goods, etc. Profit is produced by citizens. They give to each other, they create solidarity in a society. Citizens are concerned about how they are governed and they seek to influence public processes. So these three constructs shape the work that we do. We've converted those three constructs around the centers that we have. The first center, and that's the center that is hosting us today, is the Center for Entrepreneurship and Financial Inclusion. Talking about citizens in the marketplace, how citizens are creating their livelihoods and what challenges are they facing. So that center is grappling with questions around saying, how effective are the existing frameworks around financial inclusion? How effective are the frameworks and policies around promoting entrepreneurship in a country where informalization is actually growing rather than formalization? So we're concerned about those who are working on the margins of the economy, because those are the majority in our country. That's what the Center for Entrepreneurship and Financial Inclusion focuses on. Then we have another center on philanthropy and communities, trying to cohere a new sort of kind of understanding around philanthropy, because in mainstream discourse, it's been framed as what the rich do. But we have understood, especially for us from the global south, from Africa, based on Ubuntu, we've understood that people give to each other. In many communities that we have gone to, the first line of responders to a crisis it's always community, whether it's a funeral, whether it's Cyclone Idai, etc. When you listen to the narratives, it's the communities that were close by that came together. So we build upon that to say we need to really open up this conversation around philanthropy beyond the heroic role that is played by the rich, but to look at it as something that many people do. So we have spent a lot of time trying to understand philanthropy. We just carried out a study, which we'll be launching in the month of June or July, where we found 25 community foundations spread across the country, trying to understand how they create livelihoods, how they mobilize resources from within their communities. Then we also understand that citizens are concerned about how they are governed. And through that, we've established a Center for Civic Engagement. And in this center, we do policy analysis, we do policy advocacy training, we write papers. And I think our claim to fame is actually our online tracker, which is called ZimCitizensWatch.com, where we track the conversion of government's promises into policy actions. That report is coming. We had to park that report because we were afraid that we may lose momentum of financial inclusion, given the kind of interest that politics has in this country. So we parked that report. It is ready. We'll publish it. We'll start talking about it after this event. So coming back to what we're discussing today, the challenge of financial inclusion, as I said, it's not just a challenge for the development sector. We are expecting financial service providers to also be sort of concerned about this, because not only out of a welfareist mindset, but actually it makes business sense to engage at the base of the pyramid. It makes a lot of business sense. It's a portfolio that remains untapped in terms of how to engage with it, etc. So we are not making this as an argument to say, oh, corporate social responsibility, because many people then take us to that. But we're saying that even in your core business, this is an important portfolio to consider. It's an important sector even for governments to consider, because the majority of our people are eking out an existence at the levels of informality. But perhaps at this juncture, I might also add that what we have done in the past 5-6 years as Zimbabwe, we can actually celebrate some of the gains that we have made in terms of progress we have made in fintech, in terms of progress we have made around the easing of opening up of bank accounts. I opened up a bank account one day. I was just trying out. I was listening to the radio. They said, all they need is an ID number, do this. Before I knew it, I had an account number and I had a bank account. And I've never been to that bank, but I keep on doing transactions on my phone. So I think in terms of fintech and ease of opening bank accounts, we've done very well as a country. I think we may sort of applaud the financial service providers and maybe even the regulator for allowing that ease. But the story does not end there, because if it was that, we would not be having this study at all. But we actually see that the issue of financial inclusion is actually worsened. Yeah, because I think financial inclusion was reduced, and I call it financial inclusion 1.0. It was reduced and it was measured around the number of new bank accounts opened. Yeah, the number of platforms that exist, the number of people using these platforms. So we created an infrastructure, and it exists and it's solid, but we did not oil that infrastructure. It remains dry. Yeah. So in other words, we're actually making more money from the poor, but we're not putting back. Yeah. Government has also done amazing stuff around this 2%. Yeah. So government is also extracting value, but government is not investing value. So we have a real challenge that when we look at processes and patterns of financial inclusion, we actually find that even the way in which we've done it in the first round, we've actually created more inequalities. So we are finding now people in the informal sector trying to avoid it. So when you trade with people in the informal sector, they actually prefer cash because they don't want you to pay them via Equal Cash or others, because they are subject to that 2% liability. You see now, so we're actually discouraging people from formalizing because of the heavy regulation or the taxation that comes with it. So that's one challenge that we have. And but various studies have already shown us. I don't understand why we've not done it, because various studies, especially from Bangladesh, Southeast Asia, etc., they have shown us that it makes sense to lend to the poor, starting with the Grameen Bank story, and also Prahalad and others, 2004, when they're talking about the fortunate at the bottom of the pyramid. They've made a case for this to say, let's stop looking at the poor as the welfare market, but look at it as a market of growth. It's a growth market. But we have to tailor make the demands, or to actually make sure that they align with the capacities of what creating the demand. So Pralad and others create this revolution. We see it, many multinationals, Unilever, Danone and others coming up with products that are set for the base of the pyramid. But unfortunately, when this revolution visits our shores in what you may call the microfinance institutes as a sector, but what we have there are literally payday loans, school fees loans. Very little developmental finance is going through that. A couple of INGOs have tried. We saw Zambuco, we saw was it K International and others. They've come together to create consortiums. But because they're NGO-led and they're mostly projects with a beginning date and an end date, it normally collapses. So there's no sustainability in pushing that. So I think what we're going to be discussing today is to understand where we are as a country in terms of financial inclusion. Some data will shock us, but some data will confirm some of our fears already. But I think it's very important for us to, first of all, go through this data and come back and begin to analyze to say, what does that mean for policy? What does that mean for practice? Because practice, I think practice is the one that is lagging behind, to begin to say, what are the implications for those in financial services, for those in development, and for government. Because we carried out this study because we saw claims that which are coming out sort of challenge this color of development. Which is financial inclusion. I'll end here, then we can always talk.
Thanks very much for that, Tendai, taking us through the outlay of Civeo Institute and the work that it does. And I think a very pertinent topic on financial inclusion. I've known talking about how we could, after we'd read, you'd recommended the book about the Grameen Bank a while, at that time. And we were talking about how we could actually implement such a initiative in Zimbabwe. But it's good to see that you're carrying on with that kind of work, and it is now in the work that you're doing with the Center for Entrepreneurship. I'll move on to the next thing, which is the Civeo team giving us the meat of the story now, why we are here. This amazing work that they have done around financial inclusion and looking at what is working and what is not working in Zimbabwe. And also to offer a tool, the index. That will help us to really analyze inclusion. So I would like to across and Tendai Marisa again, who are going to give us an overview of the findings on the Financial Inclusion Index and the survey report of micro, small, and medium enterprises in Zimbabwe. Thank you, team.
Good morning, everyone. My name is Belinda Chaora. I am playing two roles. Firstly, coordinator for the Center for Entrepreneurship and Financial Inclusion. And so a lot of the coordination for what we're seeing today was, I was doing the running around. But as Betule said, this is a team effort, so Tendai Marisa, our executive director, was instrumental in, just coming up with the concept of us doing a report on financial inclusion and also targeting small and medium enterprises. And so all of the background into that, the man that you just listened to did a lot of that. Rebecca Cross was instrumental in developing the index, which she's going to do a presentation on shortly. So I'm going to do an overview of the findings for the survey that we carried out. Yeah, I think I should be fine. For the survey that we carried out, and this survey was carried out in 2021, which is last year. We went all over the country. I'll just explain that in a bit. But maybe I'll start off by explaining, why this report, why small enterprises. It's already been discussed, so I won't go into, the nitty-gritties. but we know small and medium enterprises play a critical role in any economy worldwide. That is undisputed. And they are an engine room of growth. In Zimbabwe, we've got high rates of unemployment, so a lot of people have turned to enterprise development. Unfortunately, a lot of those enterprises are informal. So the informal sector is a significant proportion of the enterprises that we have in Zimbabwe. When you're looking at why financial inclusion, we know financial inclusion promotes equity, as the ambassador has already mentioned. It promotes enterprise growth, and there's a significant impact on reducing poverty when there is financial inclusion. Another reason why we also wanted to look at financial inclusion, as Dr. Marisa said, is that as a part of our work in terms of policy analysis, led us to look at the work that the Reserve Bank of Zimbabwe has already done in terms of promoting financial inclusion through the National Financial Inclusion Strategy of 2016 to 2020. We're at a critical point where we can influence financial inclusion for the next phase, and I'm hoping that strategy is not complete so that we can put our 2 cents in there. So that is why we then decided, let us do something, provide some sort of information related to financial inclusion. To my knowledge, the last major study across the country was a FinMark study that was carried out in 2012, I think, and that was a citizen study on financial inclusion. This study is slightly different because what we did is we looked at a subgroup of the focus areas of the National Financial Inclusion Strategy. And that strategy was very instrumental in even how we framed our survey. So the National Financial Inclusion Strategy says youth, women, people living with disabilities, a focus area, and also agriculture related enterprises are a focus area. So we wanted to analyze the impact within the enterprise or for enterprises. What is the level of financial inclusion? So you'll notice the levels of inclusion for enterprises are much lower than what it would be for a citizen. It's easy for Dr. Marisa to open a bank account, but it's not the same for an enterprise. So that is why we've done this study, to kind of pull out that nuanced sort of understanding at that level. In our survey, we focused on these areas. We wanted to look at compliance. We wanted to look at banking access. We wanted to look at mobile money access, investments and savings, insurance, pensions, and also the amount of information that small enterprises have related to financial products and services. We managed to get responses from a total of 1,400 respondents across the country. Our target was 1,200, so we exceeded that, which is good. That was mainly because in some areas, people were more responsive than in other areas. Urban areas, 52%, and then in rural areas, we spoke to 48%. Industry representation, I'm sure from experience, a lot of you know, our manufacturing sector is not as strong as it was. So the major respondents, or most of the respondents, came from retail and wholesale sectors, which was like 22%. Vending came in at 21%, which is really significant. And a lot of them informal enterprises are found in that space. Agriculture was at 11%, logistics and tourism, each representing about 4%. Manufacturing, which I highlighted earlier, was only at 3%. And then textile at 3%, again, construction at 3%. So you can see where Zimbabwe is at, just looking at the data that we collected. Now, when we looked at the size of the enterprises that we interviewed, just as a note, we did not discriminate on the basis of gender, because we wanted to find out if we're looking at an enterprise, who owns it? Is it a man? Is it a woman? Is it someone who's considered youth or considered adult? The only thing that we used as an indicator to our enumerators that we deployed was the size of the enterprise and the characteristics of that enterprise based on the classification of the Ministry of Women's Affairs, community development, small and medium enterprise development. That is the classification we used. So what an enterprise looks like in terms of gross assets, in terms of annual turnover, in terms of the number of employees, that was the key indicator to say, do you interview them or not? whether they're owned by a man or a woman was not an issue. But from there, we gathered a lot to find out what is the gender dynamics in terms of enterprise ownership. And firstly, talking about the sizes of those enterprises, 71% are considered micro enterprises, okay? And then 26% are small enterprises. So small enterprises have an annual turnover, which obviously is, you know, is very, very small. I think it's like less than, maybe Rebecca will correct me, but less than $5,000 per annum. And then number of employees is less than 5. Gross assets, again, you know, still quite low. And 26% of those are small enterprises, and only 3% are medium enterprises. When we then went into okay, something's happening here. Okay, there we go. We then tried to find out who owns the enterprise, to try to find out more about the enterprise owner. Micro enterprises are equally owned between the different genders, but the proportion of women who own larger enterprises decreases as the size of the entity grows, which is of concern because it means women are marginalized when it comes to enterprise ownership as the enterprise grows. So there must be a reason why women are only found at the micro enterprise level. Why is it that you don't find as many of them as the size of the enterprise grows? So looking at that graph, the one that is on the left, 78% of medium-sized enterprises are owned by men. And that's a big, big issue, you know, especially when you consider when you're at micro, it's equal. But as you grow, as the size of the enterprise grows, something changes. And then we also then try to find out when you're looking at the age of the enterprise owner. We also then went to look at the age of the business, which I'll talk about now, just after this, but the age of the enterprise owner, does that have an impact on the size of the enterprise? The graph on the right is the respondents that we had, and then the one on the left is when you're looking at the distribution based on the size of the enterprise. And you can see literally you can superimpose those on each other. So the age of the business owner is not as significant. You know, you've got micro enterprise owners who are there doesn't seem to be any discriminatory impact of any kind. The age of the enterprise itself, you know, we also tried to find out a little bit about what kind of enterprises are out there, because there is a dearth of information when you're looking at the characteristics of the enterprise, the typical enterprise that we have in Zimbabwe. Most of the enterprises that we have are less than 9 years old. And again, that's something to consider, to say what is going on? Why is it that you don't have enterprises that are older? They obviously have been a lot of ups and downs in terms of our economy. So that probably plays a critical role in terms of enterprises starting and then closing down at times of, you know, major economic stress or, you know, something like that. But there is room to kind of interrogate that further. But this is what we found, that most of the enterprises that we interviewed, 73% of them are less than 9 years old, okay? And only 6% are older than 20 years. Annual turnover, like I said, we had small, medium, and micro enterprises, and we found 40% of them have a turnover of less than $5,000 per annum. So you kind of divide that by 12 to kind of get an idea of where that micro enterprise is in a month. Okay, and micro enterprises, most of them are informal. You know, as I've already mentioned, and I'll explain just now when we're talking about compliance, most of them are informal. So any income that's generated, most of it is going into taking care of a family or overseeing family responsibilities. So we only have 10% of them who have an annual turnover of more than $60,000 per annum. And that again says quite a lot. The average turnover for micro enterprises, we just took the whole sample and just kind of looked at what's the average though, is 7,500. And for small enterprises, it comes to 76,600 per annum. And then for medium enterprises, you can see the huge leap up to almost just short, 250,000, short of $1 million per annum, which is significant, the gap between the small and the medium. And it says a lot, because going forward, we'll see that in terms of compliance, all the medium enterprises are compliant, so they have access to a lot of financial products and services. But small enterprises, micro enterprises who desperately need financial products and services and support don't have it. And you can see it even in their annual turnover. They're literally living from hand to mouth. Now, when we look at compliance, so our survey, we wanted to understand, does compliance play a factor? Because it's the definition of financial inclusion based on the RBZ definition is that is talking about access to to financial products and services from formal entities. So that means these are registered entities or entities that are in some way regulated by the government of Zimbabwe, of course, so that you can have oversight, because this is a financial product or a service. But then the moment you say formal, it means any enterprise that is informal doesn't have access, because you can't get a loan if you don't have a business name, all of those things, if you're not registered, or there's some paper trail. Automatically, it means any informal enterprise becomes excluded based on the definition of financial inclusion that we're operating with. Okay, so the graph on the left, the one with the green and the blue, shows you the status of compliance. Green shows you compliant across the different provinces. Blue shows you non-compliant. Immediately, I think you can see the one with the lowest rates of compliance, 23% is province, which you'll hear Masvingo coming up a lot, because there was a big collusion with some specific provinces. The graph at the top, the bars at the top show you the level of compliance and non-compliance. The darker green is the one that's a compliance, and only 48% of enterprises across the country are compliant. 52% are not. So it's literally almost down the middle, but being skewed towards non-compliance. And that is for the whole sample, not necessarily, by size. This one now shows you compliance by size. And when we're looking at micro enterprises, the top line shows you those that are not registered. And you can see the micro enterprises, most of them are not registered. But if you look at the bottom line, that kind of registration sort of increases as you go towards the larger enterprises. And all the medium enterprises that we interviewed are registered. And again, all the medium enterprises, like I said, the average is around sort of 800,000 US dollar turnover per annum. But micro enterprises, you're talking between 5 and 7,000 US dollars turnover per annum. So you can kind of see, compliance does have an impact on what the characteristics that enterprise is then going to have on a sort of day-by-day basis. Again, we then wanted to understand what are the dynamics of gender then, between men and women as enterprise owners, because there's something that's happening in there. There's a story that's not being told, and we kind of wanted to unpack that. And the darker shades showing you men, and then the lighter shades are showing you women. So you can already see these higher levels of registration for male-owned enterprises rather than female-owned enterprises. Again, that presents a lot of questions to say, is it that women, there's something that's going on when you're now discussing the gender dynamics, and clearly women are being marginalized when you're looking at creating, because we went further to then ask what are the restrictions to registration? What is it that's stopping you from registration? And I think this graph or this will explain that. Most of them are saying, look, number one, it costs too much, or it costs too much can also mean I can't afford to take out and that out from my monthly income already way too much. You know, I've got food on to put, I need to put food on the table. I need to send kids to school. So that is just too much. I can't afford to take that out. Some of them, it was a lack of information, really saying, I actually don't know what I'm supposed to do to get registered. And when you're then going down into the small enterprises, 33% are still saying it costs too much, but a huge chunk, 26% are saying, look, it's just too complicated. You know, it's just from one office to another, it's just too much work. Yeah, it's just complicated. And again, in there, this improved inclusion if we simply compliance. So like I said, we then went to kind of look at bank account access, and only 36% of the whole have access to bank accounts. So that figure is different for the individual. And just to remind you again that this was an enterprise specific study. So as individuals, they might have bank accounts, but for the enterprise specific bank accounts, only 36% have enterprise specific bank accounts. Of great concern was 75% of the women founders do not have enterprise specific bank accounts. I said before, we wanted to understand what the impact of what when we're talking about financial inclusion for women, you know, what does that look like at an enterprise level? In this graph, the darker shade shows, it's with least bank access. So the big, what is that, pentagon? Yeah, the darker shade shows exclusion. So the darker the shade, the more exclusion. The lighter the shade, the more inclusion when it comes to bank account access for those enterprises that we interviewed. Again, Masvingo stands out. That's the one in the bottom left corner. Masvingo stands out, Midland stands out with least bank account access. With most bank account access, surprisingly, it was Matabeleland South. Yeah, I won't go into too much detail there, but I'll just leave that out there. Again, compliance rates were very high in Matabeleland South, and that immediately converts to higher access to bank accounts, because as soon as you're compliant, you can quickly access a bank account for your enterprise. But 77% of rural enterprises do not have bank accounts, and again, that's talking about, you know, the differences in rural versus urban sort of locations. You know, there's something there, there's more work that we need to do there. Yes, we've made huge strides, but there's a lot of work that we need to do in rural Zimbabwe to get enterprises, you know, access to financial products and services. And like I said, again, lowest access for bank accounts was Masvingo at 18%, followed by Midlands at 25%. Mobile money, as Dr. Maurice has said, has played a huge role in improving access to financial products and services. So you can have transactions on your mobile phone for your business, but you can also access insurance depending on the nature of the mobile network provider that you use. Some mobile telecom companies will have insurance products that they also offer. Yeah, but what we noted was that, again, we were looking at enterprise specific mobile money accounts linked. So compliance then comes again, compliance, bank account access, mobile money access, how many people then have access to these products and, you know, and services. Some people were using their personal mobile accounts, and we found that a lot, but we try to make sure that, you know, the question is well understood and that it's definitely an enterprise specific mobile money account. And what we found in the whole sample is 58% of enterprises have business specific, and so only 58% have business specific mobile money accounts. When you're looking at the national statistics of citizens with access to mobile banking or a mobile network operator of some sort. I think we are in the 90 percentile. Generally, as citizens, the average Zimbabwean will have access to a SIM card, will have access to a mobile phone. But when you're looking at the enterprise, we're going down to like 58%. In the report, well, there's a lot of things that we then ended up not putting into the report. You can get in touch with us, if you kind of want the additional information, but there was a lot of information about, which service provider do you use, what are the kind of products and services that each service provider will put in there. But already, I'm sure you will look at our report, it's already 70 pages. We kind of had to pull out some things and just say, look, yeah, maybe that is for another day, but that information is also available. Micro enterprises, I don't need to, tell you, but they prefer to use cash, just as Dr. Mrita said. The charges that come from transacting using a mobile phone, it's convenient, yes. It has improved access, yes, but they are still charges. And somebody who's watching dollars and cents to try to put food on the table, that charge makes a huge difference. Yeah. And again, there's an opportunity for mobile network operators to provide services for compliant micro enterprises. Maybe that come at a different pricing strategy. Instead of making this, you can have your freemium version and your premium version. I don't know, but there's many opportunities for changing the way that we tailor making the products that we're providing for enterprises and then also just citizens in general. Midlands is coming up again. Only 17% in Midlands have access to a mobile money, enterprise-specific mobile money account. But what we did note is that 73% of those who have mobile money accounts will use them on a daily basis. So when they have them, they're using them frequently, and they're very influential or critical to the health or to the day-to-day operations of the enterprise. And I think the light green is showing you those with, and then the darker green is showing you those without on that graph. We then try to understand kind of the restrictions, that enterprises are facing with all the different things that I talked about. So banking, investments and savings, mobile money, insurance, pensions. What are the restrictions that you face when you try to access a mobile money account or when you use your mobile money account? And 53% in urban areas are saying they experience restrictions, and then 57% in rural areas are saying they experience restrictions. So slightly higher in rural areas, but really, 53, 47, not much of a difference, but slight difference, but still, let's call it about 50 something percent of enterprises are saying there's some form of restriction. And that's like half the, those who are saying, I'm using my mobile money account, and that's a huge percentage. Again, that speaks to mobile money operators to say, something needs to change in the way enterprises are accessing your product, because it needs to be, there's barriers that really you could have removed, which would make your product more flawless or make people use it even more frequently. Now, this goes and ties in strongly with what Dr. Marisa said about community philanthropy. We try to understand where people are getting money to start a business. There's a graph that we didn't include here, but I think it's in the report on funds for ongoing business operations. So we try to understand those two things. Where do you get your money to start a business, and where do you get money for ongoing business operations? To start a business, literally 53% of people are saying, I'm getting the money from locally based family and friends. Not even remittances, locally based family and friends. So that's here in Zimbabwe. I'm getting my money to start a business from locally based family and friends, my mother, my brother, my sister, a close family relative. And remittances comes in at 8% of that. Personal savings comes in at 8%. So for businesses to start, it's literally the communities. Community philanthropy is making that happen. It's not necessarily the microfinance institutions or the government or the non-governmental organizations. It's communities coming together to say, here, I'll lend you some money, you can start a business. And like I said, there's a graph that talks about ongoing business operations. Again, personal savings was right at the top of like 53%, similar way it looks now. 53% of people were saying, for ongoing business operations, I'm using my salary or money that I'm generating, from just different hustles for me to continue the business. I'm not getting that money from the government or from microfinance institutions or from other organizations. So again, that's telling a story that people are really looking to each other, to themselves and to each other to keep their businesses running. And I know we can't borrow money at the moment, but when we ran this survey, that option was still open, yeah? So it's open now, it's open. Okay, that's good. We're back up. The system has been rebooted, yeah? So, so we wanted to understand, because for somebody to start a business, most other countries would provide some form of loan facility. Some people might have, a small grant, but loan facilities become important, and affordable, accessible loans are very important. If it's not affordable, it's pointless. And again, if it's not accessible, it's pointless. So what we wanted to understand was saying the graph on the left experiencing restrictions when it comes to applying for a loan. So only 14% of the people said, yes, I have applied for a loan. And everyone else who didn't apply for a loan, we tried to understand why didn't you apply for a loan? And these are the people who were saying, I experienced some form of a restriction. 36% of those people are saying that product or that service is not provided by the bank for me. It might be available for the different kinds of clients, but for me personally, or the type of enterprise that I have, that loan is not available. And so I can't access it. So that's 36%. And lack of information came up to 19%. Lack of correct documentation was only 11%, shockingly. Insufficient collateral was only at 6%. And then high interest rates came up at 6%, okay? So it's not, the charges are important, but they were not the most important thing. So something else in there to say, can the bank make products and services tailor-made for these enterprises? Once we solve that, we can improve what? Rates of inclusion. At least that's our A plus B plus C sort of theory. When you look at the graph on the right, we're looking at reasons for rejection. Why were you rejected? For those who applied for loans, why were you rejected? Coming up at 30%, not enough evidence identification criteria. Again, was saying small enterprises, when they need the money the most, they're not getting it. And we've given them so many hoops to jump. Is there no way for us to kind of go around that and find other ways to kind of finance them? Not necessarily removing any form of due diligence that they need to do or that the bank needs to do for its clientele, but something else is, there's a story that there's a room for a product or a service. And even just the reference that Dr. Marisa made, in other countries, they've found that balance, providing small loans or medium-sized loans to different types of enterprises as they're growing. And therein lies an opportunity for us, even as a country, to kind of change the kind of products and services that we are providing. We then looked at insurance and said, do you have enterprise-specific insurance? So this is not, kind of medical aid for yourself as an individual, but do you provide, sort of insurance for your business, for your vehicles, for your products, for your services, or for members of staff even, if they are doing any kind of work? Is there any insurance that's built into your work in any way? 81% do not have any kind of insurance. So they're literally operating at risk, of shock, whether it's from COVID, from inflationary shock, another policy coming in tomorrow, climate change, you name it, they are literally at risk, 81%. And that's a huge, huge statistic, to consider. Most of the medium enterprises, 76%, have some form of insurance access, and only 8% of the micro enterprises will have access to some form of insurance. Rural enterprises, sky high, 87% don't have insurance of any kind, but still in urban areas, it's 75%, which is still quite high. The main products that were accessed, all kind of comprehensive insurance for different products and services. When we're looking at, I'm not sure if the text on the right will be clear, but savings and investment access. We wanted to understand the habits. So yes, the service providers provide you with a product and a service, but then there's also different ways that enterprises behave once they have money or once they've made money. And then when they're accessing specific products, how often do they use them? Is it daily, weekly, monthly? So like I said, a lot of that information is there, but we didn't want to bore you with all of that detail to create a 500-page report. So some of that stuff you won't find in the report, but it is available, and we can make that information available. Looking at savings and investment, in total, about half of them, 51%, have some form of investment or savings facility. This is savings specific. And just as a note there, with savings, it was not necessarily formal way saving. So formal method saving, changing money in dollars to US dollars and storing value in a different country, we consider that as a form of saving. Using an income savings and lending group, round or condo, as we like to call them, that considered a form of saving, because you put in money and you get it at a later. That's a more way, form way of going through a bank or buying something. So 51% of services said, yes, I have some savings, and it was almost equal based on rural and urban areas. There wasn't much differences. One of the major reasons was a failure to find agreement with my business partner. And especially for the female-owned enterprise, I didn't ask that question, but the assumption to find agreement might now become, household sort of interactions that are taking place when it comes to, trying to, do I buy, do I buy forex, or do I invest in stand? What do I do with that money? Failing to find that agreement was a significant reason, which was we found, as I said, there fixed assets, like a huge number of groups are significant as well. I think this is one of the last slides, but it kind of shows you the differences in access across the provinces for mobile money, insurance, banking, and I think investments. So the light green at the top is showing you mobile money access, and that kind of gives you a picture as a country, where are we? Mobile money access is high. We've done a lot as a country to promote inclusion through mobile money, and we've done very well. But when you look at the dark green and the black, actually the black at the bottom, that's insurance, access to insurance. So literally we're giving access, Marisa said, these enterprises are operating at high risk. They literally, you know, there's no form of insurance. Climate change is a real issue for us. There's policy changes that are happening every day, and not everybody is going to survive that. We've just gone through a COVID pandemic without some form of formal support mechanism. Now, just kind of rounding all of this up. So what are the key things that we've kind of made a huge impact on financial inclusion in Zimbabwe? Undoubtedly, there's still room for more. There's room to change or to modify the products and the services that you're providing to small enterprises and make them enterprise specific, or you know, looking at the size of the enterprise, kind of try to tailor make those products and services for that group. There's opportunity to do that, although we've done a lot already, and we've succeeded in many ways already. There still remains limited access to formal banking systems. So when you're looking at traditional banking or insurance systems, we're still weak there. And we need to do a lot more work as a country to kind of bring ourselves up. Young people and women, especially women, especially enterprises that are informal, they remain on the margins. I'll say we because I'm a woman, we remain on the margins. And the role of government and microfinance institutions, I'm going to put you on when it comes to provide. It takes less than what one of the indicators that we realized was it takes less than it's about 6,800 that an enterprise needs to start a business on average. At least that's the amount of money that they were saying they would need to start a business and to get it grown. So that's on average in the whole sample. And $5,000 loan would go a long way, therefore, you know, in providing sort of some form of support for small enterprises. So it's not huge amounts of money that people are asking for in comparison. It is doable. And I'm sure, yes, it means dealing with a lot more people, but there's an opportunity there for us to change the narrative of how financial inclusion can go going forward. Our traditional infrastructure, like I said, needs to be less rigid. So that also ties in, even when we're talking about compliance with the different entities, when it comes to registration, we have to find a different balance in terms of how we're asking people to comply, how the hoops that we're asking people to jump. Some people are just not in a position to jump those hoops. It's literally, you know, people trying to make a living. So we need to make it more less punitive and more you know, reward based, or what is the value, literally, because as a business person, that's what I'll be asking myself. What value do I gain by registering my enterprise? If there's no value, then it's pointless for me to do it. I will do what gives me the highest value in the moment. Yeah. Location is important. So the different provinces, like I mentioned, as I was doing the presentation, some provinces seem more included than others, but proximity isn't everything. There's, in the report, you'll notice that despite the huge number of banks, huge number of microfinance institutions that are available in the capital, Harare, compliance rates and you know, inclusion rates for Harare are not, you know, through the roof. Harare is actually seems to be struggling. Our interpretation was that there is a cohort of informal enterprises that are going under the radar that nobody's looking to address, nobody's looking to target, nobody's looking to include. And for those people, it does not make sense to register. It does not make sense to access the products and the services because not tailor-made for the needs of those enterprises. So something needs to change there to register, like what is that? What kind of insurance products should I get? You know, why is that important? It means information becomes just as important as access to the money itself. And in the reports, there's a whole section on access to information and just the different levels of information that people have. And once again, you know, as was saying, when products are being provided, let's also give the information on how those products should be used. What is the best way for the products to be used, and at what point in a business life should those products be accessed? Because that can change over time, and so that kind of information is missing, and a lot of enterprise owners did point that out. And so now I will call up Rebecca. Rebecca is going to give you an indication of what we call the Financial Inclusion Index. It's just looking at the data from the survey. We aggregated it across the different provinces and then put it together to say, what are the different levels of inclusion based on location and different dimensions and measures that she's going to outline. So can I hand over to her directly? Okay.
Brief interruption. Want to alert someone with the vehicle registration AEV 9503. You've left your hazards on. We'd like for you to get back to your workplace or home after this. So please attend to that. Thanks, Rebecca.
Thank you. So you can take a breath from the report. There was a lot in there, but really insightful. And it was a massive study and we learned a lot from it. And so we created 2 products out of the data that we collected. One was the report, which is uploaded on the flash sticks for you to go and navigate. But then we also created the Civio Institute Financial Inclusion Index. And this was a way to aggregate across provinces, different inclusion measures, this level of inclusion of micro, small, and medium enterprises. So above me is a video that's just playing, showing you some of the visuals that are available to you when you log onto the index. It's hosted on Power BI and embedded on our website. But we really start with financial inclusion being the RBZ's definition of the effective use of a quality range of formal financial products and services, which are the ones that Belinda was talking about throughout this study. And so we really focus on provincial differences on this index because we found that the financial inclusion level or access to products and services is really influenced by the quality of distribution of these services. And so we really focus on provincial differences and then step by step, going one step deeper. So we go across these 4 dimensions, specifically barriers, compliance, availability, and usage. These are the 4, we separated all the data into these 4 categories in order to give you an array of information. This video may be going fast, there's a lot, but this is something for you to really go and dive deeper in on your own in order to get a little bit of some of the things we weren't able to include in the report. It shows some more of those levels. And so we really got a lot of interaction, but then also as a service provider, we provide pages relevant to your product. So for the banking sector, we outline specific, it doesn't want to move. That's okay. Specific services that come from the banking sector, from the mobile money, from the investments, from the pensions and insurance. So as I mentioned, financial inclusion, we've defined using RBZ's effective use of a wide range of quality, affordable, accessible financial services provided in a fair and transparent manner through the formal regulated entities. And so across the provinces, we aggregate and get this distribution. You'll note that the top two provinces are Mashonaland East with 49% of MSMEs being included, and Matabeleland South having 48%. Down at the lower end of the spectrum, below the national average of 44%, we have Masvingo, Matabeleland North, Mashonaland Central, Midlands, Harare. Some of these conclusions you might have sensed throughout the report, as you see compliance shifting in that, but also changes in the distribution of bank accounts, mobile money accounts, and impacting into that. The dimensions that we feed into financial inclusion are specifically barriers, compliance, availability, and usage, all summating to the final inclusion score. So when we talk about barriers, these are the restrictions that we were pulling out. For each product, we're looking at what enterprises have to hurdle in order to access and use them. Some of the top ones that we're finding are restrictions to withdrawal limits. That's both banking and mobile money platforms. But then affordability, so whether that's lack of inflation or lack of finance and inflation, devaluing prices has really been an impact. And then surprisingly coming in fourth was a lack of trust within security protocols of the formal financial services. So enterprises not trusting their money over to the systems. Compliance, this was a really big impactor on financial inclusion. So as you will see, formal enterprises, which are in green, would be both registered as a business with like the deeds office or through the constitution, and as well as registered with ZIMRA for tax regulation. And so we find that when an enterprise is formally registered, they are 2.5 times more likely to be financially included than if they are informal. And that is representative across all provinces. Availability that we reference is actually the acquiring of financial products. So not just having a branch in the area, but actually having a bank account, having insurance, having pensions, and all of those differences. Belinda has wonderfully talked us through it, but we're really seeing a low number, 39% having those financial products for their business specifically. So rather than using their own personal sources, they are not registering their business in those capacities. And then usage is another influence that we have. So really now we're trying to look at, great, you have a bank account. How are you using that bank account? Are you going and getting advisory services? Are you also able to get loans? Where are you really getting your funds to go? Belinda talked a lot about this towards the end. And so formally, we were talking about formal structures of financial providers. But we're really seeing that enterprises are using their own personal savings, locally based family and friends, remittances, even colleagues are feeding into the business rather than taking in money from other formal sources. So that's the overview of the Financial Inclusion Index and just what's feeding into it. But what we really then, the joy of the financial inclusion is the measures. Specifically, we were looking at the gender of the business owner, the size of the enterprise, the location of the business, the sector within that business, as well as, and then the age of the business owner. And so these are great summations of all the information that Belinda is doing. And so using those 4 categories again, we now create these averages divided across province as well as enterprise size. And so what we find is that micro enterprises, and this graph being red, are strikingly less included than small enterprises. And that's consistent across all the provinces. And so as a business grows, they are more likely to become more formal and thus be more financially included on our index. The gender of the business owner really plays an impact, as well as we see that men are really generally always have a higher inclusion score across all the provinces. Some of those differences are a little bit more strikingly across Matabeleland South, Harare, Manicaland, and Mashonaland West. But in every province, men are more included. Across sector, we specifically focused on agriculture, mining, retail, and vending. These were chosen out of the strategy. And so vending is the most informal sector, but as you saw from our sample, it was actually one of the largest subsectors within our sample, and they are consistently, again, less included across all the provinces. So vending being the orange one right at the end, and then mining being red is always financially more included. We didn't get any miners from Masvingo province within our sample. As we look at the age of individuals, we separated for youth and adults. Youth we defined as being 18-year-olds to 35-year-olds, and then adults being older. We see again that youth are more excluded across all provinces. That's more striking within Harare and Midlands, which is where we see a lot of our vendor population as well. So youth is definitely playing a role in inclusion. As we look at location, we'll see that there is again an urban bias, as that is generally greater, easier access to formal financial products and services. And so again, across all 10 provinces, we'll see that the urban population, being in red in this graph, is consistently more included. And we do not have Harare and Bulawayo on this because they did not have a rural population within our sample. And so this is where the power of the financial inclusion index really comes into play, is it takes the wealth of information that was in our survey, within our report, and brings it down into this one measure that then you can compare provinces, compare across business characteristics. And so we really wanted to note these provinces that fell below the national average. Masvingo was consistently faring poorly, along with Midlands, and then Matabeleland North, Mashonaland Central, and then Harare, despite it being the capital city and maybe having greater variety of financial services and products, there's a little bit more competition within this space. And then really, as these enterprises grow and continue to establish themselves, they become more compliant. So as we define micro enterprises as having 0 to 5 employees, less than 30,000 annual turnover, and less than 10,000, both of those in US dollar prices, gross assets. As they grow bigger than that and have higher turnovers, they are then more likely to become compliant and thus have greater access into the financial sector. And so we have the index. If you have your phones with a QR reader and data, you can feel free to scan this, which will take you to the index for yourself, but also it is embedded on our website for you to go and interact, because this is just touching the surface of this information. And we just wanted to provide this data for you to get the perspectives of micro, small, and medium enterprises and dive deeper into them. So, thank you. I think Tendai is going to come and bring that all together.
Again, can you just... Okay, I also acknowledge the fact that I'm the one delaying tea break. Yeah, so I'll try to. I've got 6 points really in policy and practice implications. So let's start off with, maybe there will be 5. Let's start off with registration, this compliance issue. It cuts across, it's really a major issue that we're seeing. And if you go back and you look at the ways in which businesses are registered in this country, it's very difficult to register a business. And I think there's need for something that is halfway. We don't have that legal instrument as yet, but we need to think through. Because when you're talking about the ease of doing business, or when you're talking about Zimbabwe being open for business, why don't we make it easy for Zimbabweans first? Yeah, and one of them is the instruments of registration. This thing around directors, proof of residence, et cetera, for people living on the margins is very difficult. So I think the formalization is actually being constrained by government itself, the bureaucracy. So I always say to Dr. Kanyenze, one of the books I'll write is entitled, "Is the Bureaucracy Stupid?" Then the second one, I think there are disparities we've already seen. And this conform to, we don't want to sound like we're bringing in new arguments here. This argument around the marginalization of women has been going on for years. It's very evident even in this data, how women are actually excluded and they're actually on the margins of accumulation, despite the fact that we know that women are at the center of sustaining households. But the system in place actually seems like a conspiracy against women. So what if we imagined a fund specifically for women, not through that bank only, but through other many banks, yeah? And also, what if we really thought about decentralization of these things? I'll come back to the third point. So I think if we think about women and we think about the youth, and also we begin to think about regions, Mashingo is coming up, Mat North are coming up. So when you begin to do, because the other part of the study that Belinda and Rebecca did not talk about is the density of banks across provinces. Trying to map that to understand how many, when we say we've got NetBank, what's their branch density like in terms of networks across the country? So, because we've seen that with technology, many banks are actually closing physical branches, yeah? And we're left now to do sort of fintech, etc. I'll come back to that about how banks are very difficult spaces. Then can I go to the third point, which is source of funds? Because we may say all this and somebody may ask, so where do you think these funds can come from? I think the framework around domestic resource mobilization, when you begin to look at where funds are in this country, the pension funds are very liquid, yeah? And I will not talk about the private ones, I'll talk about the public one, the NASA, where we all contribute, it's compulsory. But when you go and look at, so you can look at the contributions of NASA, huge amounts. But when you look at their investments, they do not invest in poor areas, yeah? So some of their collapse deals have to do with these elite deals, yeah? They're building hotels, they're building these places where workers don't go to, yeah? But what if they established this SME fund? Because last time I calculated this, when we had pure dollarization, NASA was collecting close to 11 million and they were disbursing 3 million every month. So every month they had a difference of close to 8 million, if my subtraction is in order. But when we begin to track their investments, they were at the center of all the major investments around restructuring of banks, et cetera, But these are sites or places where workers really are intimidated to go to. Yeah, so let me talk about the friendliness of the bank. The bank in Zimbabwe, and I think it says it when they say, no, they don't even understand how it works, some of the reasons they give. If you go to any branch, the bank it's an intimidating place. You know what I mean? It's a very intimidating, we need to socialize banks. Banks are very intimidating. There's that young lady or that young man behind the counter who says, how can I help you? So imagine somebody who's got a story that is not complete, that I want to sell old clothes, I want to do this. So before you know it, they're saving the next customer. So I think we need to find a way of socializing banks, because at the moment, to be honest, banks, I also have to think twice before I go to a bank. Is my script right? Yeah. So I think if we think about it that way, to say, to what extent have we socialized our banks to be places where people can walk in freely and to get advice for advisory services, etc. And also our banks are located in intimidating places. Our banks are located in the middle class areas. We're not pushing our banks in the low income areas. Yeah, they're not there. Worse off in the rural areas. Yeah, so people in the rural areas have to catch 2 buses to get to the bank. And they are told that you are missing 1 document. They have to wait for the bus in the evening to go back home, coming the following day. So at the end of the day, we really have to be serious about the practice of financial inclusion. Banks have to meet us halfway by how they extend their network. Because I think we've just done this to say, oh, now there's fintech, so fintech can resolve everything. So I think a combination of public pension funds and private banks establishing an ecosystem and a fund that can really target these spaces that we're talking about in a more meaningful way, in making sure that these finances are affordable, they're accessible, communication is clear, how you get these funds, etc. Because one thing that is missing is if we're done the information access, is many people know after the fact that there was a loan, after the fact when the funds have been exhausted. So that's very important. Then product sophistication. I think banks also need to be very innovative around this, because in many instances, when we're talking to people in the informal sector, the banks are asking them for a pay slip. You see, so it's a bit of a challenge for people to say, so how do I do this? Or they want a set of accounts, you know, completely done on Excel, very neat, etc. But these are traders. So I think we really need to find ways of saying, are we sincere about this? Because Zimbabwe has got high levels of formalization compared to other African countries. And it's actually very unfriendly to vendors and the informal sector in terms of orientation. I'm talking of the government itself. The government has found a way of getting 2% from them. They're not bothered about anything else, as long as they can extract the 2%. Private sector, when they can open up accounts, you saw the medium scale, those are the ones that take a lot of the money. But when you really go and look at them, these are large scale enterprises. You know, what we're calling medium scale, because we're using a framework that was done maybe 5-10 years ago. But if you look at their operations, some of them got branches across the country, etc. They are the ones who crowd out funding, because they're already set up for that kind of thing. The ones that are small and the micro ones, they have no chance. So I think these 6 points will help us in terms of informing practice. And then I was hoping that my colleagues from NASA will be here, because we really want to have this debate with them on how they're allocating money they're getting from workers and then allocating it for the capitalist class. Thank you so much. I think back to you, Bertile.
Oh, let's give a big round of applause to the team. I am really intrigued by the level of detail, the depth of information, the things that you've put into the study are things that are really pertinent to the environment that we're in right now. And for this time that we're in as Zimbabwe, I think this is a very good contribution to the debate and to the actions that we need to take in practice on how we become more inclusive as a society financially. Thank you very much to the Civio team for that. Excuse me. I will open up to the floor for questions. Please, if you have your contribution or your question or your comment, please introduce yourself and where you are from so that we know who is in the room as well. Thank you. Is there a roving mic? We'll take 5 questions for the team, and then we'll wrap it up.
2, 3.
Okay, there's question 1, question 2, question 3, question 4. I need a final question. There you go.
Thank you very much to the Civio team. My name is Judith Kaulemu. I'm with the Poverty Reduction Forum Trust. I just wanted to make a general comment. Listening to the findings of the study, listening to Tendai speaking, I think as we push towards inclusion, as we push towards narrowing the inequality gaps, yes, we are talking about financial inclusion, but I think across sectors, what's saying to me is the challenge that we have with our development approaches that are very siloed. And I think it's time that we decolonize that and begin to push for systems change. Because listening to Belinda talking about entrepreneurs getting their funds from families or communities, if the bank is just looking at financial inclusion, but not looking at how to support what those families do and strengthen them, then we take a very siloed approach. So really for me, it's just to push for a systems change approach in whatever we do so that we look at a holistic picture. Thank you very much.
Thank you. The next one is over there.
My name is Max Mube from First Mutual. Excuse me, I'll remove the mask. Thank you, Civio Trust, Civio Institute. Quite some work done there. From a lender's point of view, but obviously there are some additional information that as a lender you'd want to know. I'm not sure if you touched on anything to a financial level of literacy of the business owners. For us is quite critical because you get to say, if I give this person money, are they going to use it what they are saying they'll use it for? Some of it could be formal education, some of it could be informal, where deliberately these people are put into groups, they are taught certain things that have to do with running these enterprises. It would be good to find out how far we are on that. The other one, which has worked for us, has to do with the structure of ownership of these enterprises. We found that where there is more than one owner, there are higher chances of success. Even for those that are not incorporated, you find that there is that element for watching over one another. We found that you are then able to ask for some kind of members that are granting each other. I'm not sure how far that is, because we found that when it's an individual owning an enterprise, they tend to give themselves a blank check. You give them money, they decide they will use it for many other more exciting things than the boring aspect of investing into a business. I'm not sure how far you went into covering that one. Otherwise, thank you very much. This is quite a rich source of information for us. We will utilize the report. Many thanks.
Okay. Yes, this is better. Thank you. Well, no, thank you so much for the insightful presentations and comments at the end. We're part of the Legatum Institute, a think tank based in. My main question mentioned, but my main one is regarding in terms of finance. One of the main problems that you see in some of the countries in Africa is the ticket size. So at the end of the day, even if you have financial institutions giving loans, maybe they're not giving micro loans or affordable loans. So if you have quite a significant number of micro or small enterprises, they don't need 10,000 US dollars. Maybe they need 2,000 or 5,000. So I don't know if the study went into that and if you have any insights on those.
Okay, thank you. My name is Samuel Wadzai. I work with a union of informal traders called Vendors Initiative for Social and Economic Transformation, or VSET in short. So I think at the tail end of last year, the government launched a process of the development of formalization strategy for Zimbabwe. I think my view is that one of the fastest way of doing away with the financial inclusion, lack of financial inclusion that we continue to see in the country is to ensure that we have got a comprehensive formalization strategy for the country. I know that the government has been working on that. We were also part of those processes, but I just wanted to check, as we're doing your research, to what extent did this issue come out of formalization, and what the appetite to formalize? I know there are no incentives, but your interactions with the people that you interviews, individuals, corporates, even government departments, what is the appetite to formalize, and what can be done to expedite? This can be one of the quickest way of dealing with the lack of financial inclusion in the country. Thank you.
Thank you. Is there one more question? Okay, we'll leave it there. Savio team, would you like to take the seats up there, or take the questions from where you're sitting?
I would like to take them from where I'm sitting, but,
okay, but it will be good for you to
maybe
stand.
Yeah, okay, I'll stand. If you can help with some of the things, maybe, and also to just to open up to Dr. Marisa. So I think in terms of level of education on page 27 of the report, I think we kind of try to outline the level of education. So I think just very quickly, 26% of them are O-level, sort of, or the highest level of education that they've received is at O-level. Diploma, sort of 17%, vocational training, about 10%. Those with the first degree are about 19%. So on generally, most of them there is room for some form of training. People will be able to understand, you know, in a first language or in English. So I think that's also why we then said, look, let's also push forward sort of training initiatives of some sort. They are also being given literacy and also product of this. And it comes in, it should be in the first language, you know, for obvious reasons. So yes, people might be educated and might be able to speak in English or understand even the products being offered in English, but it would be better to tailor make those products and services for the language that is most understood. But yes, there is a high level of understanding. In terms of formalization, I'll take that one. In terms of what would I say the appetite, I think when you look at the sort of the restrictions, it kind of then it shows you where people are at in terms of do they want to formalize or not. A lot of people were saying, you know, at this point of where I'm at, you know, as a business. So like looking at the micro enterprises, the cost and the procedures, the bureaucracy around it, somebody then becomes uninterested. And the size of the enterprise, so micro enterprises, that was the key thing that we kept finding. Yes, you know, they want access to loans, they want access to these different products and services, but the huge chunks of tax that they would have to pay if they're registered and then, you know, are going through a whole similar system. When we're looking at other things, but they may not be aware of these other products and services that they have access to. And what they are aware of is the tax that they would have to pay, because that is foremost in their minds. So literacy again plays an important role going forward. How much information are we giving them? What products and services do you have available? But again, that's why I said, let's push for more incentives rather than punishments, because one of the things that we found when we were interviewing people, I'm sorry to put Zimra on the spot, was people didn't want in the provinces where we had lower numbers of respondents, people were saying we don't want to take part in your survey, because the last time people took part in a survey of this nature, the survey went well, but a few weeks later, Simra officials showed up and they had the list of names, So we had to push for confidentiality, obviously, when you're conducting a survey. But that was foremost in their minds, that tomorrow somebody is going to come and they're going to want to see the transactions that I'm doing and they're going to take my money. So that fear, was really significant, especially for the micro enterprises. And these are people maybe who are, can you imagine, a lot of them, like we just noticed, are women, trying to feed their children, put food on the tables. The last thing they need is a police officer or a similar official, trying to scare them into some form of compliance. So I don't think it's a case that people do not want to comply. I'm sure they do, but the system is not making it easy for them to do that. Yeah. I asked about how much they've accessed. I don't have the figures off the top of my head. Maybe if you do, you can, but I don't have the figures off the top of my head. But I could check for you, and just because that information is there. But what I think the way we asked the question was, what when we're looking at, have you tried to apply for a loan, and how much was that loan for? But that information is there. Unfortunately, I don't have it off the top of my head, but I can check for you. Yeah. Exactly. Yeah. 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 Okay. All right. Yeah. But I can check for that information for you. Yeah. Did I miss the other one as a comment, right? Okay. To Dr. Marisa and to Rebecca, you're good. Okay.
Thank you for the good presentation. My name is Lokadia Mkabeta. I'm from Zimra, and I am in charge of audits and MSMEs. So we started last year, and I was just very interested, like when I was asked to come and attend this launch. I was really interested, but maybe I have just a few comments to make, and maybe to my colleague, yeah, I heard is also involved in MSMEs, to say maybe I didn't hear anything from the presentation about the record keeping. I think that there is need for SMEs to have good record keeping. Because I was looking at I was looking at what was being said in the presentation to say, like when you approach those who give loans, they also want to have a look at your cash flows. So if there is no record keeping, how can someone be interested to give you a loan because they don't know whether they are going to get their money back? So one of the, some of the things that I've noticed, because as Zimra, we have started going after MSMEs to include them to contribute towards the fiscus. But I want to say it's like, we've been going out, we have started projects to actually do door to door and visit them and see whether they also register them. But we are friendly, like we have some workshops, seriously. We try to educate them. We are now having workshops and advising them how they are actually can make the process easier for them. And also they've raised a concern that for them, they would be interested to be registered, but if open bank accounts, the amount of income they generate, at times opening a bank account would not be viable. So they were suggesting that they want to be, some of them want to be formalized, want to register. And you know, for some of these MSMEs, for them to get tenders, they need to have a clearance certificate. I think they have a clearance certificate. And at times, you would find that some they don't get tenders. At the end of the day, also they have the participate in study. This thing, similar will come knocking on their doors. Even if you get tenders, if you get a sight of those who got that development provides. Thank you.
Thank you, Madam, for confirming the findings, but also from your own findings, it looks like it's a case that needs to be for MSMEs to be compliant, but
as well, I'm not allowed to vote. Let's look at a very good suggestion to say NASA is got about $11 million, but they are plowing back or investing about $3 million, leaving a gap of about $8 million. Isn't it necessary for NASA to set up an SME fund to support our MSMEs? But we are saying without proper governance frameworks in place, without the proper supporting systems in place, this will actually be an exercise in futility. So I wanted to check, especially with Sevio, as you were conducting your study, did you check with the respondents in terms of how governance can actually be improved? To what extent are the MSMEs getting very good representation from their representative bodies? I know we have got the likes of VSET here. We have got some informal bodies representing maybe informal traders. To what extent, and we also have even civic society bodies, to what extent are they representing their constituencies in terms of, getting favorable policies in place? The challenges are one too many. Take, for instance, an informal trader. He wants to start up a small business. And once he's set up, all eyes are on him just to extract. You've got municipal police, chasing him. He has to do cat and mouse business with the municipal police, the ZRP, ZIMRA, for instance. They also want a chunk from the little that person is actually getting. Yeah. We have got NASA. All these representative bodies, we have got EMA. They all want the little that the informal trader is getting. But what can be done to ensure that these MSMEs actually survive? They need a respite as far as I'm concerned. So let's look at the issue of governance. Without good governance in place, the issue of financial inclusion could be very, very difficult.
Thank you. Okay. Okay, so we have 2 more and then we will take a break.
So at the risk of tag teaming with my USAID colleague, I'm Jeremy Meadows from USAID. And I want to put a slight, an additional nuance on his question. As I was hearing the presentation, which I thought was packed with really fascinating, useful information, and after hearing Tendai's introductory remarks, recognizing the challenges of a welfare state or dependency society, I wondered the degree to which your analysis and your recommendations are really taking on board the political economy of this circumstance. Again, keying off my colleague's comments, these systems and these conditions exist for a reason. They're not necessarily accidental. So to what extent have you drilled down, or is Civio preparing to drill down into the real root causes for these conditions, for why compliance is so low? Yes, I agree that literacy is probably a component, access is a component, but there probably are a lot of other political economic reasons that need to be considered. Otherwise, you're really only advocating to address the symptoms and not really the cause of the disease. So that's the nuance I wanted to add to my colleague's really good question. Thanks.
Morning, everyone. Michael Mnemo from Getbacks Microfinance Bank. I just want to concur with I'm forgetting the name, Kennedy from USAID on the governance structures. I think a lot needs to be done to improve those, and even not just governance structures, but even the IT systems in all these institutions, our ZIMRAs, our regulators, the RBZ. I think she spoke about the tax clearance certificates, but for this year, tax clearance certificates took a while to come out. People were facing challenges. If you didn't know anyone in ZIMRA, you wouldn't get one on time. I think the registrations, the online registrations were not working. People had to then do it manually. I think only a few managed to do it electronically. So we need to improve on those so that people can have access to ZIMRA in the comfort of their homes or in their businesses. But now you have to go to the ZIMRA office and it takes you 5 days or 10 days to get a tax clearance, and you're going every day to follow up. So a lot needs to be done before things start improving. The other issue relates to just knowledge of micro banks. I know at our bank where customers wanting to register for tax clearance, Well, being TMFIs are not, your proper banks, so you need to go to a commercial bank for you to then access tax clearance, and such things where we have the taxmen now using registered institutions, banks who are regulated by the RBZ for their clients to be able to access their service. It's actually wrong. And we have indicated this to the regulator to say, we need to do a conscientization to the public. I don't know how they can do it to people on the microfinance institutions and not just commercial banks, because the microfinance institutions are the ones who are actually, I think, better placed to serve, people who need to be financially included. That is, I think, are also to blame. I think the operating environment we are in has sort of turned everyone into a capitalist. We are now only chasing the single bottom line, we need to move from that to now chase a triple bottom line where we are not just chasing the profits only, but we are also trying to see how we can better serve clients and include everyone in the financial services sector, and to then better our economy. Thank you.
So Vio is the blind man touched the tail and said, "Oh, elephant looks like this," etc. So I take what colleagues from your side are raising. And if we had time, we would have done those connections, because we appreciate that there's no silver bullet. Financial inclusion on its own, no matter how well it works, in the absence of other things. But what we do not take is a linear approach to say, if we fix this, then we'll get there. But we appreciate that we're trying to fix many things that are broken in our country. And governance is one of them. Trust of public office holders, trust between citizens and government. So our work in the Center for Civic Engagement deals with that in a very, I think I would say we're very consistent around trying to track and understand governance on a day-to-day basis, using our tracker and then writing the barometer report around the conversion, all these things, because we're trying to understand the pulse of the nation. So for us, financial inclusion builds upon that. It's one aspect of it. So in further writing, in further analysis, is to begin to pull these pieces together and to begin to say, how are they influenced by? Because I think if you are really understanding the deep state, it constrains financial inclusion for a certain purpose. You know what I mean? Especially if you look at rural subsidy programs, and even if you look at land relations, customer tenure, and its role in terms of entrenching the state, and then command agriculture coming in there, etc. So all those things are related to us. So we are tracking all those and understanding to say, but one thing that we sort of shy off is try to say, this is the silver bullet. If we fix this, we'll have fixed Zimbabwe. It's difficult. It's a complex emergency. So we're dealing with many things. That's why we've divided our work into these centers to try to create coherence, because soon after this, we'll be launching a report that speaks to day-to-day governance issues, the barometer, how government has performed since inauguration in 2018. That will be so isolated from discussions on financial inclusion. And we will not even launch it at an embassy like Australian embassy, because they then will be associated with something else. You see now, so all these things are happening, and we're trying, but our quest remains the quest for an inclusive society, but we understand the underpinning challenges that we have to deal with. And we are not sort of, and to your point around, for us, Belinda's Center is supposed to be helping us train a new generation of entrepreneurs who that triple bottom sort of approach, et cetera, et cetera. So this study was also for our benefit, to understand the landscape, so that when we design our training interventions, we're speaking to what we're learning. So for instance, we've already realized that we need to have courses for entry-level businesses, micro enterprises, That has come out very clearly in what we're doing, because that's where livelihoods are being cohered and sort of organized. So I think for us, it speaks to many other things, this study, and we're still dealing with the data and how to connect it with other pieces.
Pieces that you want to respond to, Belinda, Rebecca? All right, there will be another session of questions, comments, and answers later on after the panel. I'd like to wrap up the session. Let's give the Civeo team and ourselves a round of applause for this session. Let's take a 10-minute break, get a bit of sun outside. There's some tea and coffee that's being served here. Grab a cup and interact a bit, but let's be back in 10 to 15 minutes so that we can carry on, and I'll hand over to Grace Chiranger, who will take us through the panel discussion.
1, 2, 2, 3, 4. 1, 2, 1, 2, 2, 2, 2, 2, 2, 2, 2. Whoa, 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 whoa.
Mercy and grace unfold. I Bless the Lord, oh my soul, oh my soul. Worship his holy name. Sing like never before. Oh my soul, I worship your holy name. The sun comes up, it's a new day dawning. It's time to sing your song again. Whatever may pass and whatever lies before me, let me be singing when the evening comes. Bless the Lord, my soul. My soul. Worship his soul. Sing like never. Worship your holy name. You're rich in love and you're slow to your name is great and all your goodness keep on singing.
Welcome back to our second session. My name is Grace Rumimbo Chirenje, and I'm going to be your facilitator for the next hour or so. We started a bit late, so be warned. We're aiming that we have at least an hour, and then we can conclude the panel. It does look like a manual because they're women and they're women, but it's okay. And the focus of our conversation is we're looking at current regional and international best practice on financial inclusion. So I will introduce my panelists, and I want to start by introducing Dr. Godfrey Kanyenze, who's the Executive Director of LeadRace. Let's welcome him, please. We are also really delighted to have Chen Saungweme, who's the Senior Bank Examiner at the Reserve Bank of Zimbabwe. And she did tell me earlier on to say she's part of the development and implementation of the financial inclusion strategy. Welcome to the panel. We also have Mr. Arthur Chaora Wakapiwa, who is from the SME Association of Zimbabwe. Can we give him a round of applause, please? We have Mr. Crispin Mawadza, who's from the World Bank, and is the financial sector specialist. Can we give him a round of applause? Last but not least on this panel, we do have Ojijo Adhiambo, who is a senior economist from the UNDP. Welcome to the panel. So we'll start with very quick interventions from the panelists, where they will tell us what they think about the current regional and international best practice on financial inclusion. And then we will throw some questions around and we can all have a conversation with the panelists that are up here. Can I begin with you, Dr. Kanyenze, please?
Thank you very much, Grace. What an honor. I'm really humbled to be part of this exclusive club. I feel we are quite an exclusive club where that basically is partaking this research output from CVO. So congratulations to CVO. So my starting point basically is to, from a conceptual framing, is to look at the financial sector itself. When you talk about financial inclusion, we are not just talking about banking, because at times if you don't unpack it right at the beginning, we risk, just narrowing the discussion as we often do to banks, etc. When we talk about financial sector, it is made up of several subsectors. There is the banking sector with its own supervisory body. In this case, in the case of Zimbabwe, the Reserve Bank of Zimbabwe. It also includes the insurance and pensions sector. In the case of Zimbabwe, under a different regulatory framework, IPEC. It talks about the security sector under the Securities Commission. It also speaks to the health insurance schemes under the Ministry of Health. It also speaks to the legal aid schemes, which are under the Ministry of Justice. And right from the start, part of the challenge is that we've got a highly fragmented financial services sector. And with different sort of governance the most well developed is the banking sector. If you are a troubled institution, they've got of the financial services sector. For example, the insurance and consumer protection is not even there, etc. That's why in Zimbabwe, it's quite interesting. If you look at insurance products, pensions, very little uptake. And worsened by the legacy that we've gone through, the loss of value, as a result of partly also of regulatory challenges within this framework. So I think I wanted to start by just highlighting that. So best practices elsewhere in the turn of the century, millennium, most countries, Uganda, Ghana, amongst others, started off by integrating these fragmented services into a financial sector development plan. I think that's the starting point, so that these can speak to each other, whether it's the financial, the insurance sector, it can also facilitate capital deepening, etc. That is very, very critical. Then secondly, what has really helped is the emergence of these digital services, financial products and services, which have actually reduced transaction costs, which have made it accessibility a lot easier. I think one good example, best practice, I think Kenya, the example for M-Pesa, India, Peru, these actually were the early sort of examples which have ridden on mobile financial banking, which has actually extended the reach of mobile banking and digital services to a wide range of the population that hitherto had been unbanked or underserved. So I think this is very, very important. Best practices speak to the importance of having a well-developed digital framework, digital products, diversified range of products, financial services and products. But what is also emerging, which is very critical, is that these services and products, diversified services, must speak to the lived realities of especially these segments, whether it's women that usually are unbanked for reasons that we've already had. You ask the traditional banks, ask for, are you formal? They want to know your account challenges, especially if you look at the high levels of informality, especially in the micro finance segment. So in essence, the starting point also is basically to realize that you really need to address these very important issues in terms of ensuring the diversity of products that are demand-driven. I think that's the key lesson that is emerging. Most of these services in most of our countries are supply-driven. Someone sitting within their microfinance or whatever, they just come up with, very intelligent guys come up with products, etc., that do not speak to. So what is very critical, Tendai often talks about co-creation, is to integrate the real experiences. And that's where East Africa has done extremely well. The examples of banking, for example, in the slums, where they've introduced financial services to hitherto unreached persons by actually removing or relaxing
We talked about financial education. I think that was raised already. I think one to be included, it's one thing to be included, but in the absence of financial education for the people, then we may not achieve much. The other thing I wanted to raise is the direct link financial inclusion and the SDGs. I think it was mentioned in passing, but if you look at the 17 SDGs, 7 of them, financial inclusion has been identified as enabler for the achievement of those SDGs. So financial inclusion at least at the very core of policy and decision making, both at the national level and the international level. And it's so critically important that we need to understand why, what drives financial exclusion and how it can be, how we can achieve financial inclusion, because it is a critical enabler for the achievement of the SDGs. And if you are to achieve the SDGs by the year 2030, if you are to realize the vision 2030, then financial inclusion must be at the core of policy and decision making. I thought I would raise those 3 issues as a way of, as a prelude to my own intervention with regards to what are best practices. Francis talked about M-Pesa, the innovation, using mobile money, telephony platforms. But another thing that I think has really worked in that part of the world and from which we can draw very useful lessons is agent banking. Agent banking is nimble, is flexible, is more spread. I think the executive director talked about the spread of banks across the regions. But if you go of agent banking, you can find them in every corner of this country, and the manner, and it for us to achieve financial inclusion, need to go beyond the traditional banking, also agent banking, because then they work as agents of the mainstream banks, but they serve people better and in a more flexible and innovative manner. I think the link between traditional financial inclusion, other services like insurance has been ably captured by my friend, Dr. Kanyenze. The other thing that I think is important for us to look at is the whole area of digitalization as a means of achieving financial. It's been achieved in many of the greater digitalization. The ED talked about how he was to go on to open a bank account, and the parent never been to the bank in question, but he's been able to do that. With regards to institutions, I think if you look at people coming out of tertiary colleges, there are a lot of fintech startups. Are we linking enough the existing financial institutions to the financial startups, the fintech startups? There are a lot of innovations there. There are a lot of ideas there, but the light of day, there's no link between these new startups. There's no platform for people to come and people who are providing key financial. We all developments and their thinking and reporting. We have the national strategy monitored. The strategy and plan has achieved its objective. It was to end in 2020, and I'm sure there's another one that's being developed. So I think we need a system that allows for effective monitoring of progress about financial inclusion. If you said we may set a target for ourselves to achieve this level of inclusion, how do we do that? Can we have a platform and have key indicators being monitored, reported, and tracked over time that we can see that we're making about? And can we have this being independently managed so that we have objective criteria for doing this monitoring? And that leads me to the next question that I wanted to raise: greater use of data and analytics. A lot of data. But do we carry the right analysis on that data? Do we ask the right questions of that? To make sense of any data, you must ask the questions of that data and find the right answers to those right questions. I think that's very critical. And do we have the technique for doing the analysis of that data? We are treated here to the index. Can we make it more robust? Can we continuously upgrade it so that it includes these other aspects that have been not talked about? How do you build the capacities so that we can do this kind of analytics? And my last point, Madam Chair, is the need for public investments, because it is in the interest of the public sector, it's in the interest of government, it is in the interest of society for people to be excluded. We said that financial inclusion is of government. It's an enabler of the achievement of the Vision 2030. It's a key enabler of the achievement of the SDGs. Do we have sufficient public investment in this sector, in the development of financial products that would ensure that we achieve greater levels of financial inclusion? These are the issues I wanted to raise. Thank you very much, and over to you.
Give him a round of applause. Yes. Thank you very much, Ojijo, for those very insightful problem for the SME Association.
Everyone, and thank you, CBO Institute, for the work that you're doing. I think this is very important in terms of contributing empirical evidence to this space, which is something that is greatly lacking in our market at this point in time. Speaking from the point of view of SMEs, small and medium enterprise, I think there's perhaps something that's very heartening to note, which is forums such as beginning to share what is the knowledge base. It gives us great hope that we will see greater solutions coming to the fore. There's greater need for that, both in terms of all the aspects of bringing about financial inclusion, in terms of preparation, that be it preparation of the ventures of small and medium enterprises, preparation of the promoters themselves, the financial solutions that can be availed, as well as professional support services that are required by small and medium enterprises in terms of being able to mitigate risks and run and manage better and more successful businesses. There's one aspect that there are many aspects that we've covered in the morning session and even that have been raised by the two previous speakers. There's one aspect that I would want to perhaps emphasize or highlight, and debate, and I think that is the need from an SME perspective to broaden access for state developments in the regional international enterprises have more catalytic or blended. We have enterprise. If you look at enterprises, especially more so medium enterprises, their balance sheets are structures where there is a need for both debt and for equity or quasi side of it, SMEs have got access to the wide range, the full range of products and demand all the way through to your long-term equity available. But when you look at the other side of the coin, in terms of SMEs being able to access capital raising and capital financing, it's very restricted. And it's restricted to very short-term and usually debt solutions which are available. And yet we are seeing these institutions requiring more medium-term to longer-term capital solutions. So there's a great need for us to also focus on how can we develop capital markets so that small and medium enterprises can have access to that kind of funding and financing. And I often empathize with the banking institutions, the banks and the Reserve Bank, because they take a lot of flack, for perhaps not being as active as they should be. But the next time that you walk into your branch, take a look at how they publish the assets and liabilities on the wall. Take a look at the structure of the balance sheet of that bank, and you will see that the great percentage of their liabilities or their funding is constituted in demand deposits. There's restrictions in terms of what they can do with that money without creating. They also have an obligation to encourage solutions for financing for SMEs that are also geared to taking up the kind of risk profile that most of our institutions are of development within the stage of growth. We've got long-term solutions that are the funding that are in our market through institutions such as NASA, as has been mentioned. We've got longer-term financiers such as the pension funds that have been mentioned, but they're sourcing their contributions from the formal sector. And as we saw this morning, the formal sector, how many players are there in the formal sectors? How many workers are contributing towards NASA vis-a-vis the workers in the economy? How many people are contributing towards a pension fund? So they've also got a restricted pool in terms of the contributions that they're getting. We need to think more broadly. We need to think more widely and say, how can we incorporate more players into that space? How can we encourage private sector investment into that longer term capital space? The government and other such institutions can provide seed capital for that, but the bulk of that has to come from private participation within that longer term capital space. And then it then comes back to speak to the aspects that were raised earlier on, that we need to create stable environments that will enable investors to be able to freely participate in those longer term period investments, knowing that we are operating in a stable environment. I think I'll take a pause. You said 5 minutes, so I'll pause there.
Thank you so much. Thank you very much. We'll give a round of applause. Capital, accessing capital. Thank you very much. Chen, can we move to you so that you share what the RBZ has in mind?
Thank you, Grace. Thank you, Silvio. I'm so pleased. I was excited with the information that you have generated in terms of financial inclusion for the SME sector. I can tell you this is the second launch of survey results that I've attended in a space of a month. We've got SIRDC, who also conducted the same survey, but on manufacturing SMEs. So the challenge is, and I'm happy to note that you are also using the National Financial Inclusion Strategy as a basis for the conversations or the surveys that are happening right now, which is very encouraging. We are alive to the challenges of the SMEs. And what I'm happy about is when the previous speakers were talking about the best practices in financial inclusion, it's speaking to the process that we have taken as the Reserve Bank in developing the National Financial Inclusion Strategy, starting from the Sustainable Development Goals, those 7 SDGs that speak to financial inclusion. We actually have that global context. We also have our local context for the NTS1. And in developing the framework for our financial inclusion strategy, we are part of AFI, which is the Alliance for Financial Inclusion, which looks at the regional and international best practices in financial inclusion. So when we were developing our strategy, we actually looked at those aspects. And that entailed actually looking at target segments that we would want to see included in the form of financial services. And we came up with the women, the youths, people with disabilities, rural farmers, SMEs. And somebody mentioned the issues of a siloed approach to financial inclusion. What we did is we formed thematic working groups for those particular segments that we noted in our strategy. And while we had those working groups, we brought in all the stakeholders in the space of each target segment. If it's the youth, we looked at starting from the government agencies who are involved in youth programs, the associations, the development partners, all people who are involved in the youth space or in the women's space, in the SMEs, and we brought them together in those thematic working groups. Obviously, learning about CVO today, it means our stakeholder list is not conclusive, but it's still, there's room. We would love to have other associations on board. What those thematic working groups do is to identify the challenges for each segment, come up with strategies for financing and development of those target segments, so that we realize that so many people are doing a lot of work in financial inclusion, but in their own spaces. So we are now saying, okay, let's come together under the National Financial Inclusion Strategy and come up with practical solutions to challenges that these target segments face every day that have made them remain excluded. And also we used baseline statistics from independent stakeholders like the FinMark Trust. So our baseline statistics for the NFIS 1, which ran from 2016 to 2020, was 2012 and 2014. And I'm happy to say that for the NFIS 2, FinMark Trust is actually concluding an SME survey and a consumer survey right now. Mr. Mawadza, courtesy of World Bank, they funded the SME consumer SME FinScope survey, and the AFI funded the consumer one. So we are going to have more like an impact analysis of the impact of the NFIS one. What exactly did we achieve before we can embark on the second one? By the way, it's not yet launched. We are actually waiting for those results to inform us on the baseline statistics that we need to adopt and the strategies that would actually improve those statistics that we would have gotten from FinMark Trust. And in terms of the monitoring and evaluation framework, we also have one. So over the journey of the NFIS one, we actually came up with financial inclusion indicators, which in this case, we only had 3 segments that we were looking at: the SMEs, the women, and the youths. We're actually looking at access, indicators for access, which is the number of accounts that they had. And we're looking at the loans, the value of the loans that were being extended to those segments. And we noted that, yes, the NFIS 1 was looking at access to formal financial services. The numbers increased, but like Tendai said, there wasn't much else happening apart from people opening accounts. So you find that under NFIS 2, what we intend to do is to look at usage of formal financial services. We are looking at quality of those financial services. So we are collaborating with different stakeholders, including the financial players, to say, can you come up with tailor-made products? If it's the SMEs, if it's the youths, if it's the women, you cannot just have the same things for them. So that is the thrust under NFIS 2. And we are also looking at sustainability of usage of those, so that we cannot say today someone is taking a loan, tomorrow they are no longer there. So the issues that have been raised in the survey and the one for tips that I was talking about, they are showing that usage is very low. Our own indicators that we check every quarter are showing that for the SMEs, of the total banking sector loans that were issued as at 31 March, which is about 300 billion. SMEs, we have only accessed 3.90% of that. So we are not saying as stakeholders, we are coming up with strategies to ensure that products speak to their needs so that the financial inclusion strategies also have pillars that we have put in place to say, for financial inclusion to work, there has to be critical aspects that are in place, and financial literacy. And now we have added digital literacy, expect people to use products and services that they don't know about, they don't understand. And another one is microfinance, because financial inclusion is for the bottom of the pyramid segments. Microfinance is supposed to play a critical role, but you find, like previously highlighted, it's mostly the salary-based loans, but we want for production as well. So in terms of the best practices, we have gone through the processes, and under NFIS 2, we're actually coming up with a communication strategy so that we have gone to many presentations and we realize that many people will be saying, we don't know about these things that you're talking about. So we have come up with a communication strategy so that when we launch NFIS 2, we would want people to know what's happening. And you find that, as I conclude, there are things that the Reserve Bank has, or the infrastructure that the Reserve Bank has developed in trying to address. The major one was collateral. You find banks just want immovable assets as collateral. And as the Reserve Bank, I think in the third quarter, the collateral registry will be launched. I think it has been a long process because it involves external licensing and it requires a bill of parliament to go through. So that one should be launched to allow SMEs to use the movable assets that they have, whether it's their machinery, whether it's their plows, whether it's their whatever it is that they have, they can register. We have also come up with a collateral registry, the credit registry, where we are saying information asymmetry, because in a high risk, but if they can have history, and they are able to lend on that. Also on the credit risk sharing, we've got the ECGC, which is the Export Credit Corporation, which is a subsidiary of the Reserve Bank. They were trying to encourage banks to lend. So if an SME comes and they don't have the adequate security, the balance that remains after the security that they've placed, the ECGC will take that up to facilitate lending. So we are trying, we are alive to the issues and we are trying to address them together with the various stakeholders that we are working with. Thank you.
Thank you so much, Jen. That was a very fantastic intervention by the RBZ. Last but not least, we would like to hear from Mr. Crispin Mawaza, who is going to speak from the World Bank.
Thank you. I think everything has been spoken about.
Actually, the panel is done.
So actually, we work with the Chen's team almost daily. And as he has mentioned, our heavy involvement with the FinScope surveys, but we are also heavily invested in the financial inclusion space. And as he has spoken about some of the instruments that deepen financial inclusion, like the credit registry, collateral registry. There's also the warehouse receipt system that we're working with the authorities to enable producers of commodities to use commodities stored in a warehouse so that they can collateralize those and access finance. We also realized that there is a challenge in Zimbabwe. As recent as last week, we were meeting SMEs. There is a depth in early stage financing, like Arthur has said. We don't have within the ecosystem access to venture capital and also early stage financing for SMEs, which is angel financing. So those are missing within our Zimbabwean ecosystem, and I think efforts should be made to have institutions that offer, especially venture capital finance. All our work streams, we have cross-cutting themes. So 3 cross-cutting themes include climate, women, and jobs. So as we talk financial inclusion, we also are mindful of the need to have green financing, so green finance. So I'm not sure if Chen, on this work stream that's happening now, if you have got a pillar dedicated to green financing, but that's very essential as we talk financial inclusion going forward. It's also part of a responsible financing. Chen, you also did not mention the work on consumer protection that was done prior to the National Financial Inclusion 1, but consumer protection is a key component of financial inclusion, because you would want predatory financial services that make people even more excluded or more disadvantaged after interventions. We also are mindful of issues of anti-money laundering and combating or financing of terrorism. That is why you would see entities like the Financial Intelligence Unit insisting on know your customer themes. So as we talk financial inclusion, those are very essential issues on money laundering and CFT. Zimbabwe has got a very strong cooperatives movement, and some of the biggest cooperatives are in housing finance, especially on housing finance in the country. And I hope that the upcoming National Financial Inclusion Strategy 2, other countries like Ojijos, they are very big on housing microfinance. And I think Zimbabwe is very ripe for those aspects, given the traditional inclination towards housing finance, housing cooperatives. So the digital financial services, this has been mentioned. Just to mention, Tendai, as you said, the banks are no longer present, but there has been a radical shift from brick and mortar delivery systems to clicks, what they call from brick and mortar to clicks, where financial services are now predominantly digital. And this in Zimbabwe has been enhanced by the interoperability between mobile money and banking financial services. And obviously, thanks to the authorities, I think interoperability has made access to finance or access to transactional services very easy. So given that shift to clicks, payments and remittance services are very essential also as we ensure inclusion. The availability of very safe, efficient, cheap, and also cheap payment systems is important in the quest for financial inclusion. We do have a report which we call the Global Findex report, which is available, which tracks financial inclusion across the world, which has got more metrics, but I think would like to congratulate the Institute for the work done thus far. Thank you so much.
Thank you so much, Crispin, for those wonderful remarks. I'd like to come back to you, Dr. Kanyenza. You spoke about integrating lived experiences and relaxing requirements by institutions. Just very quickly from you, what one thing would you say institutions need to understand when we're looking at best practices and linking that to women and youth lived experiences? What is that one thing you think they need to understand so that they can revisit the aspect around relaxing their requirements as is best practice everywhere else?
I think earlier on we heard a lot about compliance problems. I think it looms large in the study, in the CBO study, that the procedures are cumbersome, they are costly, they are deterrent for most of these micro enterprises, especially for women, for youth, for persons with disability. We need to move towards the no frills accounts, where basically, you relax some of these traditional requirements. And I think if you look at the culture, the way businesses operate, especially in Kenya, in Ghana, for example, where they basically use group lending schemes. They look at, for example, insurance. There's the Kejo Hejo scheme in Rwanda, where basically instead of looking at the traditional ways of monthly frequent contributions, they look at relaxed approaches where you contribute as and when your income actually arrives. So that has also been extended to Kenya. They've got a lot of programs, even in the traditionally unbankable areas, the slums of all places. Amazing. There are schemes that are actually operating quite effectively in the case of Kenya, where basically you take advantage of the cultural dimensions, how people relate, the Mikambos in Zimbabwe, how we can actually come together as a group. I found it amazing when I was doing some work with UNDP on youth employment. We went to Uganda, village banks, creating sort of their own, we spoke about best practice in terms of creativity, innovation, where I think this is one of the most innovative parts, the micro, if you go to some of these places, you would find that there are so many ideas. These young people are actually abuzz with ideas, etc. As in terms of this tradition, we need records, you need to understand all this. But there are ways of doing things in such a manner that is a group lending scheme. We can look at financing each other, and we become our own keepers. Isn't it? You finance, I get money, and basically that for you to also get your 10, I have to repay. So the pressure does not come from the bank, but the pressure now comes from the sort of cohort, the group itself that is actually involved. So it needs a lot of creativity, a lot of thinking outside the traditional box. And there are huge examples already on the ground in terms of how this can be done in a cost, low cost sort of manner, in a manner also where we already know each other, the solidarity economy that Crispin was talking about, where people know each other. And I think it's a lot easier now to use those kith and kin sort of relationships to sort of create products and services that basically speak to the needs and procedures that do not make it difficult for ordinary folk to actually participate in this. So there is so much, a lot of, we have actually documented, we are actually contracted by UNDP and ILO doing the national formalization strategy. And we've documented some of these experiences from across Africa. And last week, I think we were in VicForce with AU and UNDP, ILO, we're looking at the formalization strategy. So there is a lot of experiences from which we can draw useful lessons. Latin America is ahead of us. At the turn of the millennium, they started a program for the formalization of Latin America and the Caribbean, which is FOLAC, where they've already sort of teased out some of these useful experiences from which we can actually draw useful lessons. So it's useful for Zimbabwe, being a laggard in this area, to actually, it's not bad to be a laggard, to be behind. The only strategic thing is to learn, from other people's mistakes, experiences, etc. Take time to basically, reflect on what works, what does not work, and avoiding making the same sort of mistakes that others have already made. So I think there is a wealth of experience. The world is awash with ideas from which we can actually tap as a nation. Thank you.
All right, thank you so much, Dr. Kanyenza. I'll come to you, Ochijo. You spoke about financial inclusion, social inclusion, and with a special focus on the SDGs. What do you think the government of Zimbabwe needs to know around financial inclusion, social inclusion, and with a special link to SDGs as best practice from elsewhere?
Thank you, moderator. At the core of the SDGs is this mantra of conceptual thing, but it's a very practical thing. It means leave no individual behind, leave no household behind, leave no society behind, leave leave no geographic area behind. And if you want to extend it, leave no ecosystem, leave no particular habitat behind, so that we look at the whole basis of people's livelihoods. Now, if you're talking about leave no one behind, what I was trying to say is that there is an intricate link, and there could be, I'm not sure that it's established empirically, between social exclusion and financial exclusion. When you are excluded from the affairs of your society, when you're excluded from the affairs of the household, even at the household level, it's a likelihood that you'll also be financially excluded, because people want to participate in the affairs of the society that affect them, the decision-making process. If you're already excluded from that, it's very likely, and I don't have empirical evidence, I say so, that you'll be also financially excluded. So there's a need to study the linkages and the factors at play between, in the interface between financial exclusion and financial inclusion. And financial inclusion is typically important because it's an enabler for the achievement of development. If you look at the whole objectives of the NDS1, the whole SDGs, the whole AUC Agenda 2063 is for prosperity, is for people, is for planet. Yeah. How do we achieve prosperity for our people? By making sure that they participate in the affairs for themselves as society. So I think there are very useful lessons there as we do our policy making, as we plan our programs, that we ensure that at least we don't leave anybody behind, whether in terms of access to finances, in terms of decision making, in terms of social participation in the affairs of their society, and we make sure that everybody is included. And I think it links to the issue that we raised here, that we need to look at the political economy issues around financial inclusion. What are those political economy issues? Why is it not happening? Who benefits from financial exclusion? Who does not benefit? Who benefits from financial exclusion? So I think that issue that was raised, I think, is very, very critical. Look at the political economies around social financial exclusion, and how do we address this? Maybe let me stop there.
All right, thank you so much, Rogijo. Thank you very much. Arthur, you spoke about blended capital financial models, and and as well reflecting on best practices regionally and internationally. My question to you is, how can SMEs best make their case to access those blended capital finances?
Thank you. I think, well, by inclusion through initiatives such as what is already happening, the promotion of our next financial inclusion strategy, by being involved in that, by participating in fora such as this, and having our views aired with the right authorities, I think it will help in terms of us, being able to get that viewpoint put across. I'm aware there are already other initiatives that are happening, in terms of even creating exchanges for smaller enterprises, where we'll have these capital solutions coming to the fore. But yes, I think it's important that as we continue to make these representations, it's important that once they are included in strategic initiatives such as what we're developing now, then I think at least there'll be key measurables that people can be held accountable to, or references that we can actually make to see how much progress that we have made in terms of these initiatives. So yes, we continue to advocate for that, and we say let's include it in these in these strategic documents and strategic initiatives, so that we can actually have a way of assessing what kind of progress that we are making towards towards those initiatives.
All right, thank you so much, Arthur. Chen, I'm coming to you. Chen, I know you wanted to say something, you can say it now, but before you say that, I want to also then pose a question to the RBZ that you can respond to after you made your intervention. So what has been the RBZ's biggest takeaway from NFIS 1, looking at what other institutions like yours have experienced? What did you say is the biggest takeaway you're taking with you as RBZ when you develop the NFIS 2?
Okay, thank you. I think I partly responded to that one when I was saying under NFIS 1, we were looking at access. The main focus was on access. But after reviewing our own progress and seeing also what other countries are doing, we noted that usage, quality, and sustainability is very important. It's not enough to just look at to focus on access. And also, I think funding of the NFIS 2 is very critical, because you find that at times you are so limited in terms of funding. Even the working groups that I was talking about, they come up with strategies, but they fail to implement them effectively because of limited funding. And the other aspect that we have improved under NFIS 1 was the need for governance structures for the NFIS 2 that start from government level, so that we can have buy-in at that level. I think it would also address the other issues of political economy that I've been talking about. That if the highest offices are involved in the development and the implementation of the NFIS, you find that it's easy now to have some of these programs running at national level. And then I think Dr. Kanyenze, I just wanted to say that we should also be part of the examples that he's quoting, because when Tendai was talking about practical, making the banking practical, we implemented SME desks, women desks, that are manned by people who understand the challenges of those people in all banks. So when an SME goes into a bank, instead of just going to the inquiries desk, they should actually ask for that desk. There is somebody who understands their issues, who's patient with them. And we also came up with, you've got group lending. I think you should, and Empower Bank, maybe inviting them so that they can actually outlay what they are doing, because they are not the traditional bankers that we have. They understand that women don't have collateral. They do group lending. They understand that women are timid. They can actually do business. You don't have to come with a business proposal to Women's Bank. They will come and tell us your story. We are the ones who listen to you and will put it in our template. We will understand you and tell you what you want. At times, it's not funding that people require. At times, it's just advisory services. They do that. So if you want case studies of what is happening in moving away from traditional banking, talk to Dr. Mandas Marikand of the Women's Bank. They've come up with tailor-made products for those 2 parties. I think you testified that now you can just open, you just need an ID, $5, no proof of residence, nothing. You can have an account. And I think value chain financing, you find banks are now, they realize that for them to ring fence their repayment, they are coming with strategies for SME farming. You are subjected to their pound of flesh, and they give you the balance in banks so that they can incorporate these excluded segments. Even agency banking in Zimbabwe, we launched even a framework for that, where in 2017, the obligations of service providers, duties of also the consumers themselves. And then in terms of SME, about venture capital, banks have realized that they don't have the kind of funding that most SMEs require. So I've actually attended investor fairs organized by banks, where they bring in investors from other countries or even locally to say we've got brilliant SMEs with good bankable ideas. But our funding, the structure is from demand deposits. It's not from long-term deposits, and we cannot lend our money for 10 years. Can you assist them? So there is quite a lot that is happening and heralding of what is happening.
And that's very, very useful. Coming to you, Crispin, you spoke about green financing, and you were very you're very quick to point out to say RBs need to mention it. What I'd like to hear from you is what are the two most critical aspects to green financing that the World Bank has learned from the region and globally that we can learn from as Zimbabwe and take forward as we look at the NFIX2?
Okay, I think basically it is financing industries that are sustainable, that are not hazardous to the environment. So your solar businesses, your renewable energy business, sustainable farming, green finance would ideally target. Since I've got the mic, Grace, I also should have included in my presentation the fact that there are other alternative ways that financial institutions are using to determine the credit worthiness of people, low-income households and low-income entrepreneurs, particularly women. So we have piloted a program here with Steward Bank, but this is to do with psychometric testing, whereby you are using alternative sources of data and a set of questions that determine the entrepreneurial capacity of the borrower to gauge how ready they are to receive a loan and how responsible they will be after receiving a loan. So making a decision against their entrepreneurial prowess than primarily or predominantly making a decision based on collateral that they normally do not have. So psychometrics are part of what is now happening within the SME financing ecosystem.
Thank you so much, Crispin. Comments, any feedback from the floor so that our panelists can respond to those? I'll take the first three. Questions, comments? Yes, I'll come to you, Judith. Yes. You can go first, sir.
Thank you very much. I'm not sure who would be representing the NGOs that are involved on the ground. I'm not sure if they are represented here, but on the panel, I'm not seeing them unless maybe we are looking at it right from at the top. Why it's important for us, we found that NGOs play a very critical role. We have called the process a graduation process, where they come in, for starters, they put in infrastructure in the community. After that, we've seen they go on to offer subsidized loans to introduce these people to lending. After a while, then they invite the private sector and say, hey guys, these people are ready for you. Can you work with them? We've seen that work. We've had that on beef value chains. We've had that on crops. And we've seen that it works quite well. And in that process, they've actually helped these people to move away from being individualistic to actually being able to work in groups. And when they are working in groups, it's very easy to not demand collateral. Because when somebody comes, they say, you know what, if you come alone, we want collateral. But if you come as a group of, say, 5, we won't ask for collateral. Instead, we'll actually link you with an off-taker, and then from there, it all works well. So I think that's quite a critical something. And maybe from the Apex Bank's point of view, you know, you realize that most of these financial institutions talk about stuff, but they look at it from a different point of view. Sometimes you find that they actually publicizing what to do and what they actually do. I'm thinking a different way of this could be where you have this financially, we've set aside 100,000. This is offering them subsidized loans. It's something that could actually work. Again, maybe think about low utilization of facilities that are meant for certain people. I think the challenge is the structure of those facilities. You'll find that even, and currently there was 500 million and it's partly because the intermediaries don't find those attractive. It's very expensive to actually issue smaller loan denominated, smaller amounts in terms of offering a facility, and you're saying to the intermediary, 30% margin per annum, and find that most of them shy away. You want these relaxed conditions, but when these intermediaries are actually accessing those facilities, the conditions are quite stringent. I think there's a mismatch there. Thank you.
All right, thank you very much. Please pass the mic to the back.
Thank you very much to our esteemed panel. I was sitting, I'm not from the financial sector, I was sitting here and I'm hearing terminologies like blended financial capital, risk assessment, green financing, and all that. And allow me to ask a very pedestrian question. From the Reserve Bank and Blender, you could also of financial inclusion. But when you speak to the ordinary person, do they share, is that the same definition? Because it's one thing when the parameter has been set, even if you put people into working groups to come and discuss within a framework that is set, yes, they'll discuss, but is that a shared definition of what financial inclusion is? So that when we are providing a service, it's now demand driven and not supply driven. So really my pedestrian question, what is the definition from the ordinary person that we are seeking to serve with this inclusion of what it means to be financially included? Thank you very much.
Thank you. Is there anyone else with a question, comment? Yes, we have two more. Before the RBZ one.
All right, so my question, implementation of the first phase of the National Inclusion Strategy. I think we continue to hear a lot about the exclusion and marginalization of women, youth. Yet when we look at our demographics, they constitute the biggest numbers, and we're progressively talking about moving to inclusive societies. So I just wanted to find maybe from what has been happening under phase one, to say that maybe what have you learned and observed that you wish to take into the second phase to ensure that we don't sit in a room like this, have a research like this, and we still see women and youth on the margins of, of this particular process. Thank you.
Thank you very much. There was a hand.
In terms of maybe promoting blended capital, I can also vouch for having maybe the development partners or even NGOs actually partnering up with the private sector and even with banks and financial institutions. And from USAID perspective, here I'm talking of maybe initiatives such as maybe the DCA, the Development Credit Authority. I can also talk about the loan portfolio guarantees. I can also talk of even match funding on a 1:1 basis. these are some of the initiatives that I think they can actually go a long way towards, de-risking, financing initiatives, especially when one looks at, marginalized, constituencies like the youth, the women, the disabled, and even some of our smallholder farmers who don't have, collateral security. So yeah, my colleague from First Mutual was actually saying, where is the NGO? Where are the development partners in this, matrix? I think these are some of the things that we can also explore, in terms of, improving access to finance support. Thank you.
All right, thank you so much. Our presenter to respond, please give them the mic. And to my esteemed panelists, get ready to make your 30-second parting short.
Thank you. There was something I would apply to financial inclusion. It's not, you find that, I think somebody talked about when society has kind of a dependency on welfare or inclusion. People are thinking about free loan thing. And I think this has been the challenge for most financial institutions, because when they go with their financial inclusion programs, people don't pay back because they think either it's the government that is giving them money or it's some NGO, it's a grant, they don't have to pay it back. So when now requiring them to have financial statements, bookkeeping, and all that, then they are not interested because that's not their pertinent issue. And I think it's something that I noted in our in the response to the issue about implementing 52% of the Zimbabwean population and youths, I think 37, depending on the range that you use to define youths. So they actually constitute a lot. I think there is need for actually community outreaches where you actually meet the people required, because at times it's easy for us to think they know what those target segments require. So it's something that we will have to look at and find out what they understand in terms of financial inclusion and what they need in terms of financial inclusion, so that we don't come up with products that don't speak to them or policies that don't speak to them. So I think it's a very important question. So in terms of what we will do, what we have done for the women and the youths, you find the banks, the two banks are trying to address that large constituency, try to understand them, give them what they require without the same demands, because you find banking institutions are different because they take deposits. And as the Reserve Bank, our role is to protect depositors' funds. So there is no way we can say, give loans, we can dictate to say, give loans anyhow, because these are depositors' funds that they are lending out to. And they have to have the risk management systems in place to ensure that that money comes back. So there will be like a conflict of interest because they are safeguarding even the investors. It's not the government who owns these banks. The investors also have requirements for their banks. So there is need, like I said, we have got those working groups. I think there is need for us to go back in those working groups for women and the youths to actually say, what is it that we need to do to take forward financial inclusion for these sectors, apart from the things that we have done under NFIS 1? How can we think outside the box? And I don't have the answer as I'm sitting right here, because it involves a lot of stakeholders in coming up with that response on how we can better serve them under financial inclusion.
All right, thank you so much, Jen. Does anyone else have a question before we give our panelists an opportunity to? Okay, please give them the mic.
All right. Mine is rather like a comment. I'll be commenting from a policy perspective or policy point of view. I think Mr. Mawadza has actually highlighted the issue to do with money laundering and counter financing of terrorism or proliferation financing. So as we try to brigade the issue to improve or to put up a high percentage of inclusion, there are certain policies which actually guide the implementation of the financial inclusion strategy. Say, it might be easy for us to say anyone can just open an account, but that element will be guided by the issue to do with the acts on money laundering. So as a country, we have the national task force to deal with money laundering. So those issues, we need to now strike a balance. The KYC lights, like from Arabic said, highlighted, you still get the restrictions which you highlighted when on the survey where you say the withdrawal limits are low. Those issues cannot be sort of relaxed completely because we have a guiding policy. Say Zimbabwe is under a global framework which also guides its financial framework. Say, for example, if you have read in the recent month or so, Zimbabwe was under the gray list under the ICRG group, where it was actually the ICRG will actually be looking at the policies of the government framework, whether it is porous. Say, for example, how easy will it be for an SME to open a bank account, or how easy it is for an SME to register a company? So those frameworks somehow seems as if there will be an antagonistic effect with the issue to do with financial inclusion. But then the government is now mandated to strike a balance between those two elements. So we cannot actually ignore those facets of the financial framework.
All right, thank you so much for that. Thank you very much. I need to close the panel. So can I start with you, Jijo? Just to give your parting shots as we close this panel discussion on current regional and international best practice on financial inclusion. Your 30 seconds starts now.
Thank you, Madam Chiranje. I think the question for me is inclusion for who and why. Is for sustainable inclusion. One issue and increasingly sophisticated development. I think that's a major problem that we face in many African countries. I don't think we are an exception here. How do we use that platform to mobilize resources and channel those resources through the private sector to areas where it can fundamentally affect development, whether it is energy, whether it is agriculture, there's infrastructure. That's what we need to do. Thank you very much.
Thank you, Crispin.
Thank you. So when private sector innovations in the financial service sector are met by the appropriate legislation and regulatory framework, financial inclusion will be a reality even in the short term.
Thank you very much. Yes, Mr. Aga.
Yes, thank you. Yes, there's a need for a holistic and collaborative approach to the question of financial inclusion. And we cannot overemphasize the need to have marginalized groups such as women and youth being integrated into that process. But as a caveat to that, I would add that let's keep in mind that we're already coming from a system that has got gross inefficiencies. So let's not leave anyone behind as we address the needs of these particular groups, but to make sure that we are inclusive of everybody.
Thank you so much, Mr. Arthur. Dr. Kanyenze.
Yeah, I would like to end on a political economy note, because it was highlighted, and I think that's one of the most critical issues that we need to zero in on. We inherited a highly dual economy at independence. 67% of our population resides in rural areas, and the majority of whom are women. And look at the accumulation model. The majority of them, I mean, predominantly women and predominantly people without any capital. Very, very, sort of simple implements a whole.
And you are supposed to actually accumulate a surplus with that sort of organizational framework. You can imagine most of what we're discussing, even this financial inclusion, is still very much steeped in that traditional approach, where when you talk about these things, it applies to the formal sector. But in Zimbabwe now, where we are, 86% of all jobs are now informal. And yet, if you look at the mechanisms that we are bringing in, etc., the foreign currency auction system, if you look at who is accessing it, it's the big guys, the old formal, that don't create jobs, that don't deal with the issues of poverty. And yet we are leaving the majority of the people, especially women, youth, persons with disability, in that old traditional mode where basically, they are still steeped in that subsistence, basically, subsistence farming with very little, even the discussions we are having, as Judith has highlighted, are not taking place where they are supposed to be taking place. So that also speaks to the functionality of a lot of things that we do. Education system itself. I was amazed when I went to Mauritius and we were talking to the CEO of media, their Mauritius Export Development, and she was saying, my son, 17-year-old son, and his peers were discussing, I found fascinating, stock exchange, when we give the money, they're playing games on the money market, youngsters. Yeah, I mean, as old as we are, some of these terms, green economy, we talk about, and we are, even ourselves here gathered here. So even the language that we use, isn't it? It's very disempowering. We don't even have, in our education system, we don't actually discuss these things in our curriculum. So that, I mean, and yet these are functional issues for survival, isn't it? For development. And yet they are not even in our curriculum. When I did geography, I can tell you, we used to draw the map of America, all the cities, the rivers, etc., and so forth and so forth. But you ask someone in America, they don't even know where Zimbabwe is, etc. And so the education itself, the content of our curriculum, I think we need to go back to that so that we really reach out, to the majority of the people, so that that discussion now is not taking place just here at the Australian embassy, but the people down there have got where it really happens. Bottom-up approaches actually are sustained together with the top-down, which are still useful. So I think that's a very important political economy issue that we need to take into account. Thank you.
Thank you so much, Dr. Kanyenze.
Okay, the Reserve Bank is merely championing the development and implementation of the NFIS2, or National Financial Inclusion Strategy. But you are the stakeholders. We need your input. When we have a draft, we circulate it to all stakeholders for your input. So please, if you want to join any working group, if you want to do the peer review of the NFIS, we are open. I will take your details and I will include you in our working groups. We really need these ideas so that it's a policy that encompasses all areas or all sectors. It's not just the Reserve Bank doing it. We consulted in the NFIS one, but the catchment area is still very large. So please feel free to contact me.
All right, thank you so much, Ms. Chen, Dr. Kanyenze. Thank you, Arthur Crispin and Mr. Orjijo. Thank you very much. This has been such a beautiful discussion, and we're grateful to each and every one of you for your feedback and your comments. This is me, your facilitator, Grace, checking out and handing over to Betule for the rest of the program. Thank you very much.
Thank you very much to our panelists. Doc or Belinda?
Thank you so much to everybody here. I would like to introduce you to wasn't up on any of the activities, specific faces, but there's a lot of other people working in the background who made all of this possible. So I'd like to invite up my program manager, Eda Joa. She's the program manager of Civio Institute, and she's going to do our vote of thanks today.
All right, good afternoon, everyone. Thank you for all of you who've managed to stay. We've run a little bit over time, but I think the discussion and just the subject matter at hand, is so pertinent and important. And we need to come back again and revisit it. And we hope that we'll be able to invite you to another forum and discussion where we will, look at this important matter again. But I basically got a very simple job today to just provide thanks to everyone who's made today possible. It's been a culmination of, a lot of hard work, late nights, research analysis. But first of all, we'd like to just thank our friends and colleagues here at the Australian Embassy. Thank you for the venue. Thank you for hosting us. This is such an important subject area and matter. And you are willing to come and walk with us and partner with us in just being able to launch this report and the Financial Inclusion Index. Thank you to everybody who's participated today. Thank you to our facilitators for making our panel facilitator, Grace. Thank you for helping to, shepherd us through the 3 hours, 4 hours that we've been here. Thank them us they have, but we hope you actually is for the enumerators that work with us to put together this report to develop our key stakeholders on all of this, and the people that we hold dear and central to our work, the citizens, and in this case, the entrepreneurs who were willing to share with us the information, around their businesses, around what it is that they're doing, around the challenges that they're facing, and entrust us to bring it to a forum like this and to be able to take it forward, and highlight their concerns, the issues that they're raising, in the hopes that as we move towards a second phase of, the National Financial Inclusion Strategy, that the concerns, the issues that they are dealing with, their everyday realities begin to be addressed and looked into. So really thank you to all the 1,402 individuals who shared around their businesses. Thank you to my colleagues, to the team, definitely a team effort, and we look forward to welcoming you to another event that we host at Civeo Institute, where we'll be sharing insights and information that we have gathered from citizens across the country and across the region. Thank you all.
Civeo team, we are richer for being tools and ideas and so on. And I hope for those that did not know Civeo now have a better sense, and will be inviting you to come and contribute to financial inclusion strategies and issues in Zimbabwe. We are at the close of our event. Thank you once again for being here and sharing this time with us. You have the report on your flash sticks, which you can go through in your own time and engage with the Civeo team after this on how you can also contribute your information to that. There's also the website and where the indexes as well, where you can access more information and play around with the index and see how it works. So thank you. God bless you as you're on your way back to your places. And we hope to meet you next time in the next Civeo event. There is lunch that is served, a light lunch. So please take something. There's time to still interact over the 1 hour of lunch, and then we are on our way. Thank you.